Good morning. All right, let's see what's going on here. Nvidia's down 6, Amazon down 79 cents, Microsoft up $1, Boeing oscillating between higher and lower. Somebody just sold a bunch just now, Boeing. All right, we've got 13 minutes to go, 12 minutes to go, 12 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Markets are in a really tight range. It doesn't feel like anyone's looking for a big move. If you've been looking at or read the Gamma update this morning, you know that there's not a lot of movement being anticipated. Okay. Let's see what silver's doing. Bitcoin, a little pullback there over the last few minutes. Bitcoin in the rightmost panel, you can see Bitcoin is in the upper part of yesterday's candle. Costco's up $2.63. Costco. What's Celsius doing? Celsius is flat. Had a nice day yesterday. Dell, looking for a bounce in Dell. All right, Dell had a bounce and then faded a little bit. All right, looks like we're going to need to wait. Looks like we'll need to wait for 15, 20 minutes to see what the markets are doing. We don't anticipate that we're going to see a lot of movement today. Watching options fill in. We know that the call wall shifted to 5,400. But 5,300 is still a very large strike. Let's see. Let's take a look at a few things here. This is the way Netflix finished the day. Pretty strong. We got a little give back of about $2 right now on Nvidia inside of yesterday's price action. Looking for a dip to buy. Okay, NASDAQ 100 is about 30% green, about 20%, 10 to 20% unchanged, and the rest is red. So we're about 60% red at the moment. 65, 70% red, starting to build some green. LRCX announcing a 10-for-1 split and a $10 billion buyback. Mondelez, let's see, what's the top? So we got a good mix of stocks, different industry groups in the top 10 NASDAQ 100. So that's telling me it could be some more rotation. Junk bonds are up a little bit today. Healthcare was lower yesterday. It's up today. 0.1%, not a big deal. Metals and mining, we had some strength in silver and gold. That followed through. We had I want to say Palo Alto. Pan American Silver off the watch list, continued higher yesterday. Bollinger Bands expanding. Silver. Doji. What's silver right now? Silver doing. SLV. Copper was higher. Silver's flat at the moment, so it'll open at this rate. It'll open right near where we closed yesterday, near that doji. So it looks like we're going to see some consolidation, I would think, in silver. The big news was Bitcoin yesterday had a big move, breaking out of this range on the daily, the right side, looking for a break higher or more consolidation. If we get more consolidation, then keep an eye on the miners. Sectors are 25% green, 25% unchanged, and 50% red. Metals and mining. Metals and mining. Okay, that's taken off, has taken off to the upside. Metals and mining. Okay, another way to play silver, gold, copper. Copper showing the economic strength that we are happy to see. All right, S&P pulling back a bit. S&P is off 0.1% presently. Futures are just above the pre-market low that we put in around 9 o'clock. We put in a low. We're starting to bounce, it looks like. Okay. I would give it a few minutes. All right, so Marathon Digital. It's it's pre-market. I don't put too much emphasis on what goes on in pre-market. Marathon Digital starting to bounce now. So you got people taking profits off. It runs up. Couch pajama traders. All right, let's see what pre-market. All right. We got 4 minutes, less than 4 minutes to go. Apple. I'm really interested in what happens with Netflix. Today. All right, so we were going to look at a few things here. Let's take a look at the New York FANG Index with earnings on Wednesday. We're at new highs on the index, 10 stocks. It's only 10 stocks. I really abhor the moniker Magnificent Seven. It just sounds over the top. CNBC with their over the top monikers. It's 10 stocks. It's an index, New York FANG Index. I like that better. No hyperbole. It's either moving up, sideways, or down. Right now it's trending. It's at new highs. Okay, no opinion, just what price is doing. We have earnings tomorrow in NVIDIA. Oracle's off 67 cents. Let's see. What's Tesla doing? Tesla trying to go green. All right. Tesla is about to go green. Microsoft looks good. Let me take a look at Microsoft. So we know that these stocks look good. 3 minutes to go. Microsoft looking good. Okay, so that's Microsoft. Netflix, I'd be very interested to see what Netflix does today. Broadcom, ABGO, Broadcom. Okay, that looks like it could go. ABGO, higher low yesterday, higher high today. Broadcom off 14 right now. Boeing, Nvidia's off 12. Okay, looking for these dips to get bought. Why? With 1 minute left to go, with less than 1 minute to go, why am I looking for a bounce? Dips to get bought because NYSE and NASI are both heading higher. No signs of a peak yet. Could change direction, I guess. Okay, we do have the NYSE. We're about to open here. About to open. The NYSE McClellan volume oscillator at resistance. So maybe taking some profits off the strength's not a bad taking profits off into strength's not a bad idea. Reduce your risk. Let's see how the market's open. First 15 minutes not doing much of anything except taking profits off the table. We're about to open here. Looking for our there we go. We are open. Watch for stocks. Profit taking. Netflix. Looking for a bounce on Netflix. Netflix is probably going to go. Netflix. Okay, looks. I'm looking for Netflix to follow through from yesterday. Okay, Netflix. Bitcoin's taking a break. Netflix. I'll keep an eye on Netflix. It's building a hammer and pushing higher. Watching Netflix. Very bullish action yesterday. Let's see if we get any kind of follow through. Good morning. Good morning. VFS had a nice pop yesterday. Looking for VFS to continue higher. Vietnamese EV maker, e-scooters, e-buses. I saw some positive news this morning. Okay, watching Netflix. Sorry, Netflix. Watching for follow through. All right. Hollow is on the move. Hollow on the move. All right. Netflix looking for follow through. Okay, watching for a bounce in the S&P. We're looking for a pretty tight range. VIX is starting to fade. Celsius, looking for some buyers on Celsius. It was pretty active yesterday. All right, what's Dell doing? Dell is flat, looking for a bounce in Dell. Netflix, looking for the break higher in Netflix. All right, looking for it to take out yesterday's high and for it to go. Okay. All right, here's the watch list. Watch list, let's see what is working. Alcoa, American Express, BlackRock. Some of these are from the extended watch list in the bottom. CrowdStrike down on Palo Alto Networks. Sympathy, let's see, DuPont, Centos, CTA, that's a managed futures contract. BX, flat, gold, flat, Google, flat. IBKR breaking out. IBKR. IBKR is on the watch list again this week. Okay, that looks good. Novo Nordisk, NVO, ditto. All right, there's two companies that are coming out with an obesity drug, I believe. I'm not sure who they are. Netflix looks like it wants to keep going. Netflix looks good. Microsoft, okay, that looks all right. Blue Owl, okay, Pendual looks like it wants to do something. Schwab following through. C Limited, Texas Roadhouse consolidation. Tesla looks like it might push off of the 21-day. Stochastics is turning. Okay, Transmedics, Snowflake. Okay, Snowflake. All right, it's early, so we're waiting for first 15, 20 minutes. All right, BSAT, continuation. BSAT and WTTR, that's inside day. All right. Okay, Netflix looking forward to push above yesterday's closing highs. All right, volume looks good. A little profit taking. Netflix. Google, Tesla trying to get something going. Tesla trying to go. Tesla. Nice little pop on Tesla right at the 21-day. Tesla. Tesla trying to push off. We need to get through 180. I believe there's a call wall there. Make sure you check Money Magic's levels. VIX is still dropping off a bit. Dollar 10-year. The 10-year is fading more. It's at 4.40%. VIX is fading. The dollar is at 104.62. Crude oil is bouncing a little bit. It's been down over the last few hours. Okay, S&P equal weight. All right, S&P 0-day. Watching for a setup there. Down volume is leading, so nothing to go on at the moment. Tesla watching. NVIDIA, Netflix, trying to do something here. Looking at the volume compared to yesterday at the open. Okay, yesterday's open compared to today. Okay, a little bit more volume today than it was yesterday at the same time. Okay, let's see if we can get a follow through on Netflix. First Solar pushing a bit higher. First Solar. Okay, looking for a bounce in the S&P. We're not looking for a big range, so this might be the low. And we could proceed back up to yesterday's levels, 531 or so on the SPY. So I'm watching as VIX continues to drop off a bit. All right, Tesla. Ooh, I don't have my trading view on. I got to do that. Netflix pulling back to 640. Netflix pulling back a bit. Looking for an entry on Netflix. Give it a few more minutes. Caterpillar. Intel just can't get anything going. Marathon Digital starting to lift. Marathon starting to lift. Okay, there goes Marathon. Okay, what's Bitcoin doing? Bitcoin, a little bounce in Bitcoin. Marathon Digital pushing a bit higher. Marathon. Okay, looks like it could test yesterday's high. Pre-market, we got to 23 and change after hours yesterday, I guess. Marathon. All right, let's go take a look at Marathon. All right, Tesla looking okay. Marathon. So these first 15 minutes, I'm not really looking for much to do. Take some profits off the table, perhaps. As a matter of habit, I just like to take profits off. If I'm up 15, 20, maybe 50% in some cases, I'll take some profits off. Maybe adjust my trades if we get a nice bounce. We know that we have a tailwind in breadth. We have a tailwind. NYSE and NASI are both giving us a tailwind. 2 weeks ago, Monday. All right, this is still pushing higher. No sense of a peak or a change in direction yet, like over here. Okay, NASDAQ still blue and green elder sticks. Most likely dips get bought. Oh boy. All right, so that's one of the reasons why we're very bullish, or at least staying bullish, I should say. Staying bullish. Breath thrusts, these have been pulling back. Breath thrusts have been pulling back. Let me go back to Mara. All right, we got a nice bounce so far. Marathon Digital. All right, trying to get a bounce out of that. S&P. It's still very early. Still fairly early. We are still consolidating. So it looks like bulls and bears are in agreement with price right around 5,300. We're anticipating the markets will start to move Wednesday, Thursday, Friday. Not so much today. We're looking for a similar price action to what we had yesterday based on the lack of interest in options that were traded compared to recent activity. We are bouncing. Let's look at the 0 day. We're back inside the Bollinger Bands after dropping below. Down volume still leading, so there's really no setup there. Let's see. Apple looking very strong. What's going on with Apple? Apple looking strong. Apple, nice pop in Apple. Don't buy it up here. Wait for a little dip. Maybe back to VWAP. It's nice follow through. AMD. Okay, AMD drifting a bit lower. Apple. All right, so no follow through in the S&P. So nobody's chasing. I assume nobody's chasing. Looking for this to consolidate right near 5,300. See if we stick to this area or if we start to trend. 4 days, 5 days, we've been right along this 5,300 level. Traders seem to be in agreement. Lack of interest in trading options for the most part. Okay. Apple, Microsoft, dipping. Tesla looking the most promising. Tesla most likely to succeed. Tesla following through. Nice follow through on Tesla. Looking good, Tesla. S&P, looking for a higher low. Need to start pulling away from VWAP. Otherwise, we'll probably get a flat VWAP and price will just stay here along 5,300. Should be a little bit easier to move higher given the call walls shifted up. That said, we do have NVIDIA earnings tomorrow, and there's a lack of interest in trading options that we saw yesterday. So we had a choppy price action. We had almost a shooting star on the daily S&P over there on the right. Gravestone Doji. The stronger looking indices, New York FANG index, it's only 10 stocks, of course, but we're up against yesterday's high. And when in doubt, you always want to check the New York Stock Exchange. Okay, so we're just consolidating here too, sitting on top of the Keltner channel. We've already made new highs. Industrials this week above 40,000. Oh, yesterday was 40,100. We also had a new high on Thursday, Friday, trading at highs. Dow Industrials, only 30 stocks. All right, looks like we're going to have to wait a few minutes. Let's see what happens after 10 o'clock. Marathon Digital, no follow through, pulling back. All right, looking for Netflix to follow through. S&P looks like it's going to bounce. Remember, we're looking for a tight range, so S&P would be bad. All right, we got Beagle talking IBM. Let's take a look at IBM. That had been basing at the lows recently. coming out of a base. Good one. Good one. IBM coming out of a base. No need to chase it. IBM looking good. Let's see. ATR is about $2.50. It's currently up $3.60. So you're paying up if you're buying here. Note the Bollinger Bands are coming together. We pushed above the 921.50. Bollinger Bands coming together. It's above the 200 days. So nice progress after several weeks of consolidation. RSI rising. Maybe some leaps on IBM. Netflix looking for a break higher. All right, just scanning through, watching IBM looks really good. IBM still going, looking good. IBM. All right, so we're dealing with a very sticky 5,300, not expecting a big move in the markets at present. IBM is ripping there. IBM going. Apple looking good. All right, looking for these FANG stocks to take off to the upside. All right, S&P just stuck. Microsoft looking good too. Looks like the FANG stocks might catch a bid. Some of them anyway. All right, Apple looking very strong. Apple looking very strong. Netflix looking for a breakout above yesterday's range. There goes the S&P. S&P. Okay, VIX dropping. All right, maybe I'll hold on to Tesla a few more minutes. Tesla. Nice follow through in Tesla. All right, looks like Joe K is an IBM. IBM looking strong. Come on, Netflix. Looking for Netflix to follow through. S&P, a little pop there, but nothing to get excited about. VIX is still dropping. Microsoft, I'd really like to see Microsoft take off as well. All right, so the FANG stocks, many of them look pretty strong. The New York FANG index. Bitcoin starting to bounce. Bitcoin bidders and Bitcoin. All right, so IBM looking really strong. IBM. All right, got a nice crossover on IBM, looking good. Previous crossovers, we got nice little pops. All right, looking good. Looking good. Okay, we got a nice crossover using Petra's 3820 chart setup. All right, looks good. Having a good day so far. I hope everyone's on the same page. We're just waiting for maybe we get some sort of direction, some elevated buying. For now, we're just anticipating price can stay in this area, create a doji, watching the FANG stocks. Like to see the FANG stocks following through. New York FANG. Okay, Amazon pulling back a bit. Boeing off $3. Boeing. I think that's probably going to be an opportunity on Boeing on the little dip. It's not going to go up every single day, but Boeing, some news that it hit turbulence between London and another country, a flight. Some person died, so the turbulence must have been pretty bad. Must have broke their neck or something. Either that or the person had a heart attack. Did they say? Probably a heart attack. I know, I know I've been in turbulence to the point that I'd want to take, I'd want to, I thought I was having a heart attack. Oxygen mask deploy. Okay, so let's take a look at Boeing. All right, Boeing, higher highs, higher lows. Okay, so it's not going to go up every single day. We had 3 up days, a little pullback, looking for a follow through. SPY, S&P starting to move a bit more. Mm-hmm. Come on, Netflix, get a move on already. All right, look at the S&P is starting to move. The S&P gets a move on, maybe we'll see something. Netflix, Doji, inside bar on a daily. Inside bar is defined as a move back into the previous large candle from the previous day. So we had a lot of buying yesterday. It looked like an expansion day. We were beyond the ATR. So the definition of an inside bar is we trade about 25% into the bar. We're looking for direction and the predominant trend to continue, and that is up. So we're looking for Netflix to break out to new highs. Have to see it first before we can deploy a trade. I'd be looking at a vertical, something in the money, maybe 10 handles wide for a debit. All right, Microsoft, watching Apple for a breakout. Boeing looking for the bounce. Amazon. Microsoft. Microsoft is trending along the upper Bollinger Band. Microsoft. Apple looking for a break higher. Apple looks like it might go a bit more. Apple looking very strong. Apple at the highs, following through. Very. When was the last time we were up at 190? Right? Apple. Let's take a look at the New York FANG again. New York FANG index. Okay, so buyers at the low of the day looking for a pop to a new high. Okay, we're up nearly 50% from that October low now. Just are we at 50? Yeah, we're at 50% now, so that looks good. A lot of people looking for the pullback to happen, perhaps timed with Nvidia. A lot of commentary about some companies waiting for Nvidia's next generation chip. I would just think that the chips that were earmarked to these big companies, I think it was either Google or Amazon, the chips that were earmarked to those companies will go to a tertiary company or a a lower um, a smaller cap company, perhaps that's looking for chips. Maybe they get a discounted price on that. What is it, the H100 that people are looking at? Delaying purchases of those and instead going for the more updated versions. I don't know. I'm just going by just my thought process at this point. Looking for a follow through. New York FANG index broke out to new highs. So these 10 stocks, we're looking for a follow through. There goes Microsoft. Microsoft looking very strong. Let's go see what Microsoft looks like. Microsoft, maybe some credit spreads on Microsoft. You know, maybe something below 415. Let me see what a credit spread on Microsoft looks like. Don't look like Microsoft's going to pull back anytime soon. Microsoft. Let's take a look at that. Let's see on the watch list. Hmm. On the watch list, Microsoft, July 25th is the next earnings, July 25th. So we can safely say sell something, sell some credits. Once it pulls back towards VWAP, we'll probably sell a credit spread on that. Let's see what the IV is. Implied volatility on Microsoft, only 20%. So let's go out a couple of weeks. Let's go out to say June. June, that's pretty low. Not looking for much movement. Not a fast move on Microsoft. IV 17%. First week of June. Let's see what that looks like. 16%. All right. So implied volatility is pretty low on Microsoft. Maybe just but with the implied volatility low, if Microsoft starts to get a move, the implied volatility will expand, and so will your option premium. So watch that. Okay. Apple at the high of the day. Apple. Microsoft looking for a dip to buy. Okay, Microsoft. What is the ATR on Microsoft? Microsoft's ATR. We're at 50% of Microsoft's ATR, so this could go a little bit more. Microsoft. Today's Tuesday. Can we get something on Microsoft? Apple. Microsoft looks like it wants to keep going. It's on a buy signal. It's above PMZ. All right, watch Palo Alto. You might have an opportunity on Palo Alto. It's probably going to base down here. I would think Palo Alto will base for a while. I wouldn't think there's a big hurry to get into it, but it does look good. at 300. Nice round number. It's been there before. Pivot. 21-day bounce. A little overbought still. I would let it base a little bit more. Implied volatility dropping off. Tesla. All right. So if you're looking for a bullish trade on Tesla, watch the dip right now. Tesla pulling back a little bit. Okay. Netflix is still holding up very strong. All right, probably making people a little nervous. So I'm sure there's probably some people taking the trade off. It's not working. I'll get back into it later, and then it pops, taking out yesterday's high. Netflix looking good. That's Apple. Netflix looking for a follow through, trying to break above this level. Apple looking good. Apple looking good. All right, looking for Netflix to take off. The FANG stocks, maybe we get a follow through in these. Okay, Apple trying to go. Netflix is somewhat squeezed. There goes NVIDIA. NVIDIA going. NVIDIA is coming out of the top of the upper Bollinger Band, starting to move higher. It's down $7. It was down like 12, 13 bucks earlier. NVIDIA. Do I want to do a trade on NVIDIA for earnings? If we're going to buy it, buying the dip makes sense. NVDL. NVIDIA. All right, I filled on NVIDIA 4250. 4250. Looking for Netflix to break out. All right, so NVIDIA is a day trade for now. Looking for it to bounce and see how far we can take this. I might just take it off if we fill the gap, get back up to yesterday's high. I don't know. I could also keep the shares and buy some puts for earnings tomorrow. I don't know. We'll see. Expecting a tight range. David. Watching Netflix, the breakout. Okay, I'm going to freshen my coffee. The markets are just grinding along. We are not expecting a big day today. Range is pretty tight. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Tuesday, the 21st, 10/27. Scarcely an hour into the trading day. Looking for Netflix to break out. Watch Netflix. Let me go freshen my coffee. I'll be back. Give me 5 minutes. Watch Netflix here. It's about to go. There it goes. There goes NVIDIA. Netflix is going. There goes Netflix. Netflix breaking out. There you go. There she goes. Netflix. Boom. All right, looking for a pop. Okay, Netflix working. Looking for a follow through. This is a grind. I'm supposed to be getting coffee. I'll be right back. Let me get my coffee. Netflix caught my eye. All right, watching Netflix. S&P finally getting a move. Boeing, turn the corner, Boeing. All right, Netflix pulling back in. Looking for a trend that persists. The S&P, nice bounce in the S&P. Dell following through. Microsoft following through. Bitcoin still trying to find a base here. Bitcoin intraday, looking for a base here. Nvidia pushing a bit higher. Okay, Boeing starting to bounce a little bit. All right, Boeing got about $2 to go to get back to green on the day. S&P not looking for a big move. If it does start to break out, that would be significant. Netflix, looking for the breakout, looking for a breakout on Netflix. Looking for Netflix to go. Be nice to see another day like yesterday. Super micro pushing a bit higher. Come on, Netflix, let's go. Looking for Netflix to do what it did yesterday. Let's take a look. Netflix yesterday. Netflix yesterday. Okay, Netflix was a pretty big move yesterday. Let's take a look at price action yesterday. We did something similar yesterday. We popped up, went sideways, consolidated until 11 o'clock, and then started trending after 11. Today, we popped up, consolidated. While it's not the same, there is some similarities. We are making higher lows, higher highs, looking for Netflix to continue. All right, just looking at yesterday over here on the left. Volume. See the volume coming in? Volume looking pretty good. Netflix. Bollinger Band. Note the lower Bollinger Band is finally opening up. We talked about that yesterday. Okay, that lower band starting to open up now. That's showing potential for a fast move, increasing. Okay, just a gradual turn. Netflix looking for that follow through. Okay. Netflix. Nothing yet. Still consolidating at VWAP. All right, Google, Netflix. Looking for a higher low and a higher high. Okay, NVIDIA grinding higher. NVIDIA is going a bit more. Qualcomm, you looking at Qualcomm, Frano? Okay, let's look at Qualcomm. Yep, looks good. Qualcomm trending. Qualcomm, Netflix. S&P, looking for a little B and C or a little pivots, higher lows. All right, Supermicro going. Watch Supermicro. Supermicro going. Supermicro is going. SMCI. Okay, nice move on Supermicro. VWAP is tilted up and to the right. SMCI, bullish VWAP. Volume. Okay. Apple just sitting on top of VWAP. Looks like the air is coming out of the ball at the moment. Supermicro looks like it's wants to do something, but not putting a lot of effort into the idea that this is going to follow through at the moment. Where does Netflix go? Netflix still consolidating. Looking for that pop higher. It didn't happen until about 11 yesterday. So Okay, Apple looks like it's gearing up to go again. So is Netflix. The fangs look pretty strong. They're not fading. I'm not expecting a fade. I am expecting perhaps that the markets will consolidate a little bit. All right, Nvidia is trying to go green. It's $2 away from going green. Tesla, finally a green day on Tesla. No follow through per se. The stocks are doing okay, but they're not like jumping. They're not jumping. Let's go take a look at the FANG index again. New York FANG index. Okay, we are grinding higher. We've got something of a doji now. 50% return since October. That's 2020. Oh, that's 2023. So I don't know why I put 2022. So you might have caught that as well. 2023. Wow, can't believe it's May. Memorial Day coming up. No volume. Let's see. Let's turn that off. Turn the volume off. Okay. Okay, can we get a higher low out of the S&P? Super Micro looks like it wants to keep going. Super Micro. Don't forget, you can, if you don't want to trade individual names, you can also trade SMH or SOXL. Super Micro. Super Micro last time around when it reported in April, end of April, 200% revenue growth, 362% earnings growth. No reason to believe that won't continue for at least the near term, next few months into year end probably. SMCI, Supermicro. Netflix is trying to go. Netflix is trying again for the breakout. Netflix. Supermicro looks strong. Supermicro. Okay, Supermicro is going. Supermicro. All right, that's going. Supermicro. SMCI. All right, this looks like it wants to go. It's above the 50-day. All right, just above the 50-day. Volume. I'm tempted. If it wasn't for NVIDIA earnings tomorrow. Maybe SOXL again. XOXL. Let's take a look at SOXL. These are above the 50-day, right? SOXL. SOS. Here's SMCI. SMCI. SOXL. Oh, no. Okay. SMH. A bit more expensive to buy SMH, but grinding higher into NVIDIA earnings. All right. So I sense the reluctance to get too much, take too much risk on at the moment with semis, with NVIDIA reporting tomorrow. Maybe not the best sector to trade at the moment. Let's see. Sector wise, we're about 60% red, 40% green. Small cap energy, pharmaceuticals, financials, energy, metals and mining. Those are the top sectors. So let's look at energy. That had pulled back recently and is trending along the 50-day. Look, the 50-day is almost a straight line. So this could be an opportunity. Let's look at PSCE, that's small cap energy. Okay. This is a little bit more gappy. If you look at an intraday chart, you can see it's a lot more gappy. So you don't do market orders on this one, PSCE, small cap energy. I just keep an eye on it because I'm interested in IWM. I want to see more of these small cap sectors trending higher. Not a whole lot right now. NVIDIA grinding along with no particular place to go. Let's see. Netflix is breaking out. Comcast, CMC, SA. All right, so Comcast is introducing a Peacock, Netflix, Apple TV streaming bundle. I don't know. I cut the cord a long time ago, 2010. Let's see, Comcast trying to reinvent itself. Yeah, it's not my favorite. All right, I'm keeping an eye on Netflix though. That is a favorite. Netflix looking for the breakout. Look at that lower band. Look at that lower band starting to turn. All right, so watching Netflix and the S&P. All right, stock's looking a little better. Netflix trying to break out. Netflix looking for the breakout. There it goes. There it goes. Starting to go. Netflix. Netflix. All right, starting to climb. Netflix climbing now. Looking for that breakout. Okay, coming into maximum profit on Netflix. 647.50 would do it. All right, goes Netflix. Netflix breaking out. There she goes. There she goes. Netflix is going. Yes, yes, Corey. Yes. Netflix going. There goes Netflix. Netflix going. Go, go, go. Netflix go. Go, go, go. Netflix go. All right, nice push, blah, blah, blah. Nice push higher. Netflix, just keep going. Make everybody happy. All right, S&P looking for this higher low pivot to lead to a higher high. VIX is starting to roll over, so it's looking much better. All right, ETHE continuation from yesterday. Ethereum. Okay, watching that one. All right, the NASDAQ 100 is still about 70% red, 30% green. So we're not out of the woods yet. Even though we are making higher highs and higher lows, we're up 0.05%. We're basically flat on the day. S&P, not expecting a lot. So maybe you go wash your car, do something, waiting for the markets. Netflix, boom, boom. Netflix looking for a follow through. Can it keep going? Netflix looks good. Netflix looks good. Nice. Nice range breakout yesterday. 7 days, it consolidated after a huge run up from the first week of May. Ran up from 550 and nearly up 100 points now. Wow. 100 points. 100 points in 3 weeks. Mm. What's Bitcoin? Bitcoin's pulling back a little bit more into yesterday's highs. What's Marathon doing? Marathon Digital, Marathon. Okay, that did dip a little bit more. So, some thoughts about Marathon. Okay, Marathon Digital. Uh, how do I word this? Um, this particular position, in and out, in and out. Okay, so when it runs up bigly like it did yesterday, look at the size of the candle on the daily chart. When it runs up big like that, take some profits off in the strength and wait for the next dip. Let it run up again. Take profits off. Let it dip. It's probably just going to keep doing this. Um, that's just my initial knee jerk reaction to this one. Whenever it starts going, wait for the dip. Wait for the dip. It runs up, dips, runs up, dips. So you sell into strength, especially on strong days like yesterday and 2 weeks ago. We had that little pop 2.5, 3 weeks ago. And the previous at the end of April, third week of April, it ran up, take some profits, wait for it to dip. Not just to the dips, but waiting for the dip to get bought. Okay, so right now it's dipping. So it's probably going to do it again. It's making higher highs and higher lows. No reason to believe it won't with Bitcoin doing what it's doing. All right, looks like it's going to start the bounce right now. Marathon Digital. First Solar. Wow, First Solar still going. Okay, watching Palo Alto. I see Paticus is in Palo Alto. Are you in it or are you just looking to get in Palo Alto? Ooh, that looks good. Wow. Yeah, it looks good since your first post. Yeah, it looks really nice. It's trending. So it did, yeah, move pretty substantial this morning, the drop in Palo Alto. But what's happening here? Okay, yeah, it pulled back. So 5 steps forward, 1 step back. but it's in a bullish trend. Look at the 921. So this is the kind of thing I'm always looking for. It pulls back, and what happens? Buyers step up. Now, did I buy it today? No, I haven't, but I would be interested in the near term, if short term, if this starts to get more, uh, obtain more interest and starts to move higher. I'll be looking for more bullish action and for volume to erase that red bar and start adding more green bars on the volume because it is making higher highs and higher lows. This is not. It should be pretty obvious what's happening. Okay, we're not doing this. Okay, we're not doing this anymore. We're doing this. Okay. So yeah, the dip is probably going to be an opportunity. I'm not buying it right this minute because I'd wait for what'll happen the next couple of days because I'm looking at RSI turn down. Stochastics could recycle again to right in this area and then turn back up. That could happen. MACD is still showing bullish momentum, so it's really this volume right here, and the fact that it's making higher highs and higher lows. I think you're fine. I'm sure you're probably comfortable with it too. So looks good. First Solar, First Solar looking good. I was just looking at that a few minutes ago. First Solar, I have a credit spread on First Solar, a put credit spread, and I could roll those up actually. First, what are those? First Solar, that is June 180, 175. I think I'll probably mark that one up. Let's take a look. Spreads, condors, First Solar. Okay, so that's the most recent one I have, 180, 175. So I don't think it's coming back to 180 anytime soon. So I could probably double up, or I could roll these up for a credit, probably a little further out in time. But this looks fine. That looks fine. I'll leave that there so it's easier to see. Yeah, so First Solar, big move on First Solar. I know some of you like to trade that. I know Frano likes to trade it from time to time. S&P looks like it wants to go. S&P looks ready. Let's look at the 0-day setup. 0-day. 0-day. Okay, 0-day. 5-minute chart looks good. If we had more up volume, I'd be more interested in the S&P. But because we're looking for a pretty tight range, I'm thinking we're going to stall around here. If we start to break out, that would be noteworthy if the markets start to break out here. Okay, so 5,400 is definitely something we're thinking about. We have positive gamma, so this could go. This could actually go. So the advanced decline line is that red or green? Gotta zoom in here. It is neutral. Okay, advanced decline line is neutral. Could see an upside move now. Tick is at 348. Tick is at 348. Okay, up volume is starting to turn the corner. All right, so up volume made a higher low just now. Okay, First Solar coming back a bit. First Solar. AMC looking for higher highs and higher lows. There was a lot of activity in AMC yesterday. Okay, so we were just saying that we were looking for it to stall in this area, not a big move. If it does start to move higher and rip away from VWAP, S&P, that'd be noteworthy. I'd be paying attention if you're thinking about a long trade. Watching S&P cash. I'm sure a lot of options traders are eyeballing 5,400. We got to get through 53.25, 53.50 first. But yeah, it looks pretty good. When you're thinking about, let's say you're thinking about NVIDIA earnings tomorrow, what are my thoughts on NVIDIA? Let me just share with you, not that my thoughts are any more important than anybody else's, but this is my thought process. Here is, NVIDIA is looking for NVIDIA is looking for, or NVIDIA investors, traders are looking for NVIDIA to report good earnings and perhaps a breakout. Russell's looking for it to move lower. Okay, my thoughts are that we have a tailwind. So any pullback's most likely going to get bought, similar to what you see with Palo Alto Networks. Okay, that's my thought on Nvidia, because there's no hint of a change in direction yet on this particular summation index for the New York Stock Exchange. You're trading Workday. Workday looks good, Tony. Workday looks good. 50-day is just overhead. So thinking resistance until it gets above. Okay, AMC, watching AMC here. This could be a cheap way to play these meme stocks. AMC. Oracle. Okay, Oracle. I have a credit spread on Oracle as well. Did I mark that up? I think I did. Oracle. Oracle. Yep, Oracle. All right, the most recent credit spread on Oracle, 110, 105. Okay, it doesn't look like it's coming back anytime soon, does it? Note the lower band looks like it's starting to turn, the lower Bollinger Band. So it looks like we could see more of a grind higher in Oracle. Oracle looks good. Okay, so I sold a credit spread on this one. You can see what I sold. Oracle. Looks pretty good on the 5-minute as well, Oracle. Great thing about credit spreads is you don't have to be totally correct about direction immediately, okay? Meaning, selling credit spreads, I just need a mild trend higher to slightly sideways or lower, and it's still fine. But as it starts to bolt higher, this credit spread is losing value very quickly. 621, so need a couple of weeks to go by before theta really kicks in. The last 2 weeks of the option life. Still got $4 and some change in those puts. Let's see. Oracle. Oracle. Actually, those are pretty cheap now. I could sell these right now and just be done with it. Release some cash. All right, so $30 per contract. Yeah, I'll go ahead and close this. Oops. I'll go ahead and close this. I'll go 30. Okay, Oracle, I'm out. Oracle, credit spread. Put credit, $30 per contract. Okay, Oracle. I think I posted that in there. Oracle, let me see. Oracle, Netflix, Costco. Speaking of Costco, let's take a look at Costco. TJ Maxx had earnings, right? Costco, COST, Costco. Okay, Costco's been sideways lately. Was consolidating sideways. Costco, BJ's. They're building a BJ's near us to compete with Costco, which is like 5 minutes in the other direction. Oracle, I'm out of that one. Okay, Oracle, that was a nice credit spread. I could do one a little closer. Maybe I'll do one a little closer. Oracle, let's see. I should have probably just rolled it for credit and save on the commission. Oracle. I just closed this one. I just closed this trade for $30 per contract. It's not coming back to it anytime soon. I could sell like the 116. Let's see what that's going for. Put credit. All right, let's do a put credit. Let's see what that looks like. Vertical put. All right, the implied vol is 24% for Friday. I'd be interested in like 2 weeks out. Implied vol is only 20%. All right, so I'll pass on that for now. I'd like to see implied vol above like 30% or so. That'll happen if the Bollinger Bands continue to open up. Okay, so what's Netflix doing? Netflix looks like it wants to keep going. Netflix, S&P. Netflix. Okay, still grinding higher. Netflix. Netflix, it ran over its ATR yesterday. It was up 130% at one point. Netflix. So IBM just sitting on top of VWAP, bounced again. It's the second bounce today on IBM. Looking for a break above 175. AMC, nothing yet. All right, looks like Netflix wants to keep going. Netflix negotiating the highs. Netflix looks like it wants to keep going. Watch AMC. AMC trying to do something. Netflix had a very big day yesterday. 130% of its ATR traded. It ran over the Bears. Came out of a squeeze early. Volume looks pretty good today as well. So a similar kind of price action, not the same, but similar. And we're yesterday we took off at 11 o'clock, 11:30, and just continued higher. So we're seeing if that pattern returns or if it just stalls here with the S&P. Not looking for a big move in the S&P. Netflix. What's Tesla doing? Tesla. All right, Tesla hanging out at the highs. Dell finally going. Dell went plus 2.5%. Dell. All right, Dell on the move. All right, Dell having a good day. Dell. Nice follow through from yesterday, moving back up. I bought some yesterday right in this area, right around, what was it? That looks like about 220 ish. Dell, Michael Dell, Jensen Huang, and I forget what his first name is, McDermott from ServiceNow. They were all in Las Vegas talking to Bloomberg. It was funny because Jensen said, blah, 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 blah. If you think this, blah, 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 buy Dell. So we bought some Dell. It did dip a little bit, but it followed through. And I could take the trade off now, actually, with a nice profit. Yeah, it's up nicely. That's up nice. Looks good. Dell. Uh, could see a little bit more upside, maybe. Dell. So those 155 calls and the 145s are $4 in the money, looking good. Dell, nice move. Looking for it breakout. Yesterday, it felt like we could see more of a drift lower. That was before I realized that there was going to be some sort of get together with Bloomberg. People were paying attention, I guess, because shorts started covering, and we got a nice little follow through today so far. Could be a bullish engulfing candle if we get above 155. That'd be kind of cool if we see this bullish trade continue in Dell. I have a small position. Is nothing to write home about. I just found it interesting that they were sitting there having a powwow talking about Dell infrastructure and how it fits in with NVIDIA. Fufu's up 12% today. Mondo posting in the trading room. Fufu looked kind of gnarly yesterday at the low. $550 to $650 are previous pivots on Fufu. Okay, S&P pulling back a little bit. Inconspicuously, just pulling back a bit. Yeah, Bitcoin was pretty obnoxious yesterday. Nice move, though. All right, Netflix, a little profit taking in Netflix. Okay, not the same as yesterday. This time of day yesterday, we just started grinding higher and didn't look back. Netflix. AMD looking for a higher low. And a move above 170 would be nice. That'd be about a $5 move from here. AMD watching. I have a put credit on AMD 155, 150. Maybe I'll close that. Let's see. Close AMD. $40 per contract. Oh, those expire Friday. All right, I'll leave those alone. All right. Okay, Palo Alto. Paticus has been trading Palo Alto. Nice grind higher, pulling away from VWAP into the gap. Beautiful. If you're thinking about position in Palo Alto, I'd wait for a dip, if any. If there's any dip, looks pretty good. Palo Alto, nice trade, folks. For those of you in Palo Alto, nice bounce. Palo Alto Networks. Paticus is in this. I believe, Frano, you're still in this, right? Palo Alto. I have no position in Palo Alto. Palo Alto, I have no position. Zscaler is turning the corner. Let's see. IBM is one that was mentioned by Beagle this morning. IBM, nice pop. Looking for a follow through. The 50-day is just overhead at 177-ish. 179, 179.10. Let's just say 179 for the 50-day on IBM. 179. That would be a $6, $5 move, $5 to $6 move on IBM. That could happen. Dell bouncing. Microsoft. Microsoft is going. Microsoft. Watch Microsoft. This is looking pretty good. Microsoft. Okay, so a lot of good press on Microsoft. Microsoft about to break out. Microsoft looking good. Microsoft going once, going twice. Microsoft. Okay, SMCI is closed, is consolidating at the highs. SMCI. Okay, Microsoft looking for the breakout. Okay, Microsoft. Let's do this. Microsoft going. Microsoft looking for the breakout. Microsoft going. Microsoft. Okay, there it goes. There goes Microsoft. Goodbye. Goodbye. day trade, Friday options, Friday's options. All right, looks good. Okay, Microsoft doing well. Microsoft looks good. Thank you very much. Thank you to the Bulls and the Bears covering positions. Go, Microsoft. Go. Go, you witch. All right, looks good. Microsoft. Microsoft. All right, we'll be 100% on Microsoft here shortly. Frano mentioned Microsoft this morning, so thanks, Frano, for the mention. Let's see what kind of options we got. Microsoft. Live flow on Microsoft. Microsoft still going. Looks good. Thank you. Thank you for let me be myself again. Wah, wah, wah. I love the people that are, well, I shouldn't make fun. I shouldn't make fun. You can have the opposite. That's what makes a market. Some people bearish, some people bullish. I just find it funny in the face of the flow that I'm seeing and price action rising. You got the bears still objecting. And you got 10,000 contracts just traded on the 435 call for Friday. We're about to go in the money. We're about $4 out, 350 out. Looking good. Big move on Microsoft. All right, there it goes. Microsoft Daily breaking out. That's a beauty. Got bears objecting though. Bears are objecting. The typical language. The AI PC chip pump is useless, blah, 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 blah. That may be, but price action is telling another story. Price action and option flow is saying that they're bullish, and they have been for some time. You can see the accumulation of shares as earnings. What is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 18 days after earnings, we're making new highs. So think what you want, Mr. Bear, Mrs. Bear, Baby Bear, Goldilocks. All right, Goldilocks eating Mama, Papa, and Baby Bear's porridge today. Okay, wow, impressive, very impressive price action. Do I have a double copy here? What's going on? All right, so that's good. All right, so look at, Microsoft is kicking ass right now. Oh, there it goes. Frano, thank you for the heads up. I wasn't paying attention to Microsoft this morning. I did want to buy a position. Okay, nice move on Microsoft. Teamwork, teamwork. Teamwork in the trading room. People making money. All right, Microsoft calls are up 80%. Those expire Friday. Could see that freaking follow through. Okay, Microsoft. Okay, this is a William O'Neill special. All right, so the breakout above 430, what is it? 10 cents above 92. Okay, we're definitely above that. So okay, starting to go. Okay, looking really good. Look at the earnings. Look at the growth rate. What's not to like? Oh, there goes Microsoft. Oh man, laughing my ass off here. All right, so There she goes. There she goes. Looks beautiful. It's a beautiful thing. Breaking out, looking good. I love it. I love it. Love it. Love it. Microsoft. Oh boy, there goes Microsoft kicking Aztec. Oh my gosh, look at this thing go. Microsoft, beautiful. Look at that flow. It's a gorgeous stock. Boom. Okay, up over 100%. Microsoft. Okay, so that looks good. Microsoft. Oh, looks good. Microsoft, where'd you go? Where'd you go? There you go. Okay. Almost went off the screen there for a sec. Microsoft. Okay. Microsoft, nice follow through on Microsoft. Okay, took half off at 100%. Thank you, Frano. That was a nice heads up. Early enough to make a decision. We saw the flow coming through, looking good. Wow. Nancy Pelosi's net worth is over $250 million. And what has she done all of her life? She's been in Congress. Wow. Talk about hypocrisy. All right, Microsoft looks like it wants to go. All right, so maybe some further out calls, probably not a bad idea. Um, Microsoft is already up quite a bit, so I don't want to chase for a second trade. Microsoft, What were other traders trading? Let's see, what were they trading? Um, all right, so Microsoft is up 113%, 106% of its ATR, daily range 113%. So you would be chasing up here. If you're, this is what I like to talk about. Okay, so here's Microsoft. It's a bullish trend. When's the best time to buy Microsoft? Is it at the high of the day? No, it is not. It's earlier this morning. If you missed it, then the next best earnings or the next best entry, sorry, I got NVIDIA earnings on the brain. The next best is a pullback, BNC pivot. Does it happen? I have no idea. Yesterday, we were looking for a BNC pivot on Netflix. It didn't happen. What's Netflix doing? Okay, so Netflix is kind of flat today. Yesterday, we had a nice rip to the upside. We didn't get a BNC pivot either, and it just kept going. So these New York FANG index stocks could just keep going. So the point I'm trying to make is that, when you get a stock like Microsoft that has just broken out using the William O'Neill method, you're looking for a 10-cent move above that pivot right there. And that's the buy zone, which we're watching right now. So what I'd be doing is I'd be buying early in the morning like Frano was. We did that. Okay. Early in the morning, Frano was looking right in this area. She saw the dip, I guess, and then the move back above VWAP. Volume picked up. Look at the relative volume compared to yesterday, 10 o'clock. Look at 10 o'clock over here. Look at 11, 10:30. Look at 10:30. That should be really obvious. Okay. So that's something I learned from SMB Capital. Watch that relative volume, because if you have relative volume compared to the previous day and the 5 days prior to that, if you have elevated volume 2 or 3 times normal and a stock in this case above VWAP, you see what's going on here? The stock is above VWAP. You got a good setup. Microsoft, any news? Microsoft, AI companies pledge to develop technology safely, blah, 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 blah. AI-powered PCs powered by Qualcomm processors. NVIDIA expands collaboration with Microsoft to help developers build, deploy AI applications faster. All right, so that's pretty important. I would think that NVIDIA collaborating with Microsoft is more important. So you have a catalyst, you have price above VWAP, you have high relative volume, you got everything that says the stock is in play, and then boom, it takes off. And it still looks like it wants to go. So people are actively buying Microsoft. All right, so a vertical call maybe. Vertical calls on Microsoft. It's probably going to keep going. Just give yourself enough time for that to work. Let's see, vertical call on Microsoft. So going out, let's say, let's go out a month to the 21st. All right, so June 21st, buy to open, sell to open. What the hell is going on with Schwab? Okay, something's going on with Schwab. Vertical call. Okay, didn't like that. Microsoft, looking for a dip in Microsoft. Yeah, Elon, I've been reading his book. I haven't finished it yet. I just get sidetracked, but his mom gave him $2,000. He came from Africa, right? He left Africa. He went to Canada, went to school in Canada, and he had 2,000 from his mom, 2,000 from his dad, and then he met people, and obviously he's hard to deal with, but damn, what a success story. He's relatively young. I mean, all things considered. Wow. All right, so Microsoft, just watching Microsoft. Okay, so obviously we got the nice run up, a lot of shorts covering. So it's a bullish trade. I'm just looking for B and C pivots now. If you missed Microsoft this morning, oh, you bought calls yesterday. Okay, May 31st, 4:30 calls. Nice job, Frano. Or was it yesterday that you made the comment about Microsoft? I thought it was this morning. Wow, very nice. Oh, you mentioned the weekly 4:30s active. Okay, cool. Pa, 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 pa. Frano, great job. Great job. Great teamwork in the room. I have to tell you, I'm so proud of you guys and ladies. It's like a proud father. Tesla. All right, what's going on? Tesla. Oh, there goes Tesla. Okay, so we're above 180. There goes Tesla. All right, Tesla. Let me just check the chart. Okay, ATR is 86%. So Tesla's still got room to run. Okay, nice move on Tesla. Boom.
this price. I'm in it lower than here. This is a company that's based in Needham, Massachusetts, but very few people are aware of it because it got bought by a Chinese billionaire who then spun it back out in 2023, making it a U.S. stock.
Tesla, a nice breakout. Okay, cool.
In August, Chinese stocks were at their lows. People just didn't want anything to
IBM moving. Okay, IBM's on move. Trying to push to the highs. Microsoft. Let's go take a look at Tesla. Got a nice move on Tesla. Breakout. Wow. Just Tesla, just very nice.
RSI is about 80. That's scorching hot. I would probably let it cool off a little bit before establishing a new position. It's an 18 forward PE. Earnings per share growth this year expected something like 20%. So that's the story we're talking about.
Tesla looking for the follow through.
Before we talk about really what's at stake over the next 24 hours, Bryn, and we know
Tesla.
Interesting price action today too in the Nasdaq, which is attempting to go positive, and if it gets there, it's going to be because of stocks like Nvidia, which we're right hugging the flat line today, but right around that 950 level. How about Apple? That comeback that stock's had above 192. What do you think's really at stake with these earnings that are looming?
I mean, I think the earnings Oscars are tomorrow, and Best Picture will go to Nvidia.
Tesla.
I mean, we all know the estimates are 242% revenue growth with 412% earnings growth. And so I think they're going to continue to have another crushing quarter. I think between Jensen and Satya, they're like two rock stars. He's going to have an awesome earnings call. He's going to sprinkle in a bunch of other companies.
That'd be really cool if Nvidia blows it out again.
And so I just think this stock continues to be somewhat underappreciated. I mean, it's up 90% year to date, so I say underappreciated.
Yeah, underappreciated.
But
I can't help but laugh.
Well, let me explain some context. Yesterday, Dan Niles was on one of the shows, and he had a really good point that Nvidia is actually trading at 15% below its 5-year PE average. And so that's what I'm talking about. And so I still think that there's this sentiment that sometime in the next quarter or 2 quarters, Nvidia is going to start acting like a traditional cyclical semiconductor company where all of a sudden earnings and revenues start growing at a slower pace and decelerating. I think that absolutely will happen, but I don't think it's going to happen until maybe the back half of this year or 2025. So I think you'll see a one handle, 1,000 on the stock before you see it 800.
Yeah, it's going to be an interesting 24 hours for certainly holders of Nvidia like you and Josh and Jim. What do you feel like is at stake as we look ahead to tomorrow?
Well, a lot's at stake, and the question is what's going to happen. I totally agree with
Good Tesla. Look at that volume.
As far as the cyclicality, I do think the cyclicality.
Nice.
Not in the next 1 to 2 quarters. I think maybe in the next 3 to 4 quarters. That's obviously not the near term. But Scott, to answer your question, as I think about the stock right now, I think about this quarter. The estimates from a year ago. And remember, it was a year ago when they had that first blowout quarter that just all of a sudden made people like me understand this was a different company than the usual. Those estimates for this quarter are up 230% from a year ago. That's a lot. Okay, they're up 20% in the year to date. And my point on this, we all know what the stock has done is I would not be surprised, again, to Bryn's point, if you have a beat and raise tomorrow afternoon. I would not be surprised if the stock popped in the after hours. And I also wouldn't be surprised if at the end of the week it actually trailed off a little bit. Let me be clear. I'm not negative on the stock. I'm long the stock. But there is a point where you have to ask how much of this is priced in.
Yeah.
I know the earnings estimates going out the next 5 years are 31% annualized growth. That's going to be hard to come by for the next 5 years. Next 2 to 3 quarters, sure.
The growth now versus then, so to speak. I think we have a graphic to kind of show you what is expected. Earnings are expected to be 5 times greater than they were last year. Revenues are poised to more than triple from a year ago. There we go. That's on our wall. Yes, we think it's the most impactful earnings report on the S&P right now, just given what that stock is done, it's a near double already in how much it's responsible for the look. I mean, there's a fair amount of hype around AI, but they're realizing
Tesla. Whoa, Tesla's gone, baby.
So that's why
Tesla is gone.
so much at stake, especially when some are suggesting what the Nasdaq has gone from oversold to overbought, seemingly overnight.
Still going.
Yeah, well, look, NVIDIA is 5% weight of the S&P 500, but obviously AI touches so many different companies throughout technology, throughout other sectors in the market, throughout the economy, and we're in the second or third innings. I think there are a lot of various different ways you can play that theme. I'm not in NVIDIA, as you know, but I am in other names that have done quite well over the last 2 years as well. So I think you kind of pick your spots. I think the expectations are quite high for NVIDIA, especially because the hyperscalers gave you that information. They told you that the 4 big hyperscalers, Amazon, Meta, Google, and Microsoft, are going to spend $177 billion in CapEx for cloud and generative AI this year alone. That's just enormous, right? And then global CapEx is actually going to grow $225 billion this year alone. So clearly that benefits a lot of companies. NVIDIA is included in that. I think as a result, if let's just say it doesn't meet these aggressive expectations and the stock falls, I really do think you're going to see buyers.
By the way, for those of you trading Tesla, I just want to point something out. Survey says.
I'm just choosing to play it a different way, but certainly it is a very, very important report.
Yeah, there's no doubt. By the way, Evercore ISI, long and strong into the print, outperform 1160.
Jan 17, 25, 240 calls.
We know the bar is high. How could it not be? Stocks,
Right before the pop.
Double, as I said, in some 5 months.
I guess I'll keep.
And you know what? Every quarter, we're told this is the quarter that something will go horribly wrong, and it just hasn't happened yet. Look at the last time they reported, which was February. Earnings per share came in at $5.16. The estimate was $4.64. You have any idea how many times
Nice move on Tesla.
to get to that $4.64, and they still stepped right over it like it wasn't even there. $22.1 billion in revenue.
NVIDIA looks like it wants to go. Watch NVIDIA.
The stock went up 16.5% in response.
NVIDIA is about to go, folks. Watch NVIDIA here. All right, Tesla. NVIDIA, let me just shift gears for a second. Look at NVIDIA. NVIDIA about to break out again. All right, so I'm going to go back to Tesla. Keep an eye on Tesla. A lot of option volume. Right before the breakout there, we had a $200,000 trade, or $380,000 trade in the January 2025 240 call. January 2025, January for another. January 2025, the 240 call, 380,000 share block. $380,000 block, I should say. And Tesla looks like it wants to keep going.
This company will come out, beat earnings, and then have anything other than positive things to say, but about the second half of the year, given the weight at which people and corporations are spending on this stuff. What we don't know is how much is already priced in, and that, frankly, to me, is the real thing that's going to be revealed tonight.
Yeah, been crazy tomorrow. Been crazy. The stock, goes down to 750 and now it's at 950, seemingly. Snap of the fingers. But I like what Steph had to say. That look, she doesn't own NVIDIA, okay, for whatever reason, missed it, valuation too high. But she points out Broadcom and these other stocks, like Bank of America today talks about their top 5 U.S.
NVIDIA breaking out. NVIDIA is breaking out. Goodbye. Goodbye.
Right, Steph? I get all the hype around NVIDIA, and I know you probably wish you were able to capture that kind of.
So Tesla's popping, and a bunch of people saying it must be Pelosi.
Yeah, and it's a little bit cheaper than
That's pretty funny. Now look at Tesla. Look at Tesla. Damn. Scott, good thing you held on to those shares.
That's actually one of the
And so fast forward to today, you're at 30 times forward. However, their part of AI is going to go from 10% of the company, of their semi business last year to 25% by 2025. That's huge growth too. And I do think it's somewhat underappreciated. And again, they benefit as well from the hyperscale spending, and they have the best in class margins, free cash flow of 12 billion this year. They will in the fourth quarter, they will increase their buyback again. They have the VMware acquisition, which
Beautiful.
helps them in terms of
Beautiful, beautiful. They're NVIDIA looking great. Nice job, NVIDIA.
So I do think that there's a lot to look forward to with regards to Broadcom. Maybe it doesn't get the splash as NVIDIA does, but that's fine by me.
Citi says today they're wildly bullish on semis. They list Lam Research, by the way, on that list, which you just bought more of.
Tesla. What a beautiful move on Tesla.
Yeah, and this is one that's lagged the SMH. It's up 22% this year, so it's not bad. But
Okay, so
Applied Materials, its biggest competitor, is also
Michael Dell and Wang on Bloomberg again today? Okay. They were on yesterday too, John.
This is going to be a second half 2024 situation.
What time was that? That's 11:42. All right, so
And we're starting to see green shoots in NAND WFE with regards to supply demand. ASPs are increasing, utilization rates are rising. So I want to get ahead of this turn. In the meantime, the company has done a really good job in terms of gross margins. And of course, today they announced the big buyback and the stock split. That typically is positive for a stock. I'm surprised it's not up more, but I think that the underappreciation is the NAND recovery. It's coming. It's just a matter of timing, and I want to get ahead of that.
Yeah, $10 billion buyback, 10-to-1 split, too. I'm glad you mentioned that. By the way, that Citi note, they're also bullish on Applied Materials, AMAT, in the semi-equipment space. And
And everything that Steffi just said about wafer fab equipment spend applies to AMAT as well. I think for holders of AMAT or Lam Research, we're often wondering, well, geez, should we really be in ASML? I mean, that's the monolithic monopoly. But the pricing of the shares is much different for AMAT, and I'm more comfortable there. I'm also more comfortable because AMAT touches more of the actual chain by which semiconductors are built. But regardless, whether it's AMAT, Lam Research, or ASML, we're building semiconductor plants all over the place. It's not just here in the U.S. It's Japan, it's India, and all these companies are going to benefit. Well, I'd love to touch on Qualcomm with you. I was just going to bring that up. Okay, go ahead. Because this is what a stock.
No, because chips have gone crazy over the last month, too, and Qualcomm's on the list of maybe the third best performer, up 25%, a record high today. You've got Teradyne up 40%.
NVIDIA. Oh boy, NVIDIA's gonna go. It's gonna go. Nice. Okay, looking good. Okay, what's AMD doing? AMD. All right, moving away from our put credit spreads that expire on Friday. I could take those off probably. Let's see. Yeah, those are going for pennies soon. AMD following through. Nice. Boeing, higher lows, higher highs. Looking for Boeing to go green on the day. Caterpillar.
In addition to edge computing on smartphones, as far as AI capabilities go. So there's a reason that the stock is breaking out. I just want to say one more thing. I remember recommending the stock in early 2022 at 190, and then it went into the desert. And folks, I felt bad about that. I did. But if you stuck with it as I have, and if you stuck with me, you're now reaping the rewards.
Stick with the farm. Thank you. I do think also our chart of the day. We don't have direct ownership there, but obviously it was disappointing after the earnings report. And it does.
Celsius looks like it could get going. Watch Celsius.
Palo Alto from people who don't own it. Stock's down about 3%, and that's a recovery. You look at the intraday.
Celsius percolating.
Yesterday from where it opened this morning. We'll take that as a W. I think if you're in shares in Palo Alto, the analysts are bending it too, like Dan Ives today. CrowdStrike is where you're at, Josh, and then Steph, you bought more Fortinet. I mentioned yesterday, I was giving Rob Sechin a bit of a hard time because the cyber stocks have done so well, except this one of late. Why'd you buy more? Is that the reason? Because it's underperformed?
Well, yes, and I'm also a very big bull on cybersecurity, and I do believe the big five names are going to get bigger. And
Yeah, I'm not expecting a big move, David. Not expecting a big move in the S&P. Individual stocks, these are working okay.
Many different vendors. They didn't want to be hostage to one particular.
Caterpillar.
A lot of different vendors. The problem is the vendors don't talk to each other, so not a lot of things are working well. And so I think you're going to see the big five get bigger and bigger. I think Fortinet is one of them. Now, last year,
ARM Holdings. All right, that looks good. ARM.
earnings, and they had the lower guide. I think they've righted the ship. I think you're at trough earnings at this point, especially in firewall, which is a big exposure for them. But don't forget, 2 years ago, this was one of the best cyber security names. And so my point is, some years they're going to be lumpy in terms of ups and downs in the stock price. And when they're down is when you want to own them. And I think this company has done a really good job in terms of switching to more platform like that concept. You're also seeing that with Palo Alto, by the way. They had a pretty good quarter on the platform side. Yeah. So I think that you want to try to find the ones that are lagging. This one it's frustrating, but I think at 7 times price to sales versus Palo Alto at 13 times, I think you have an opportunity over the long haul.
We're going to take a quick break. We come back. We're going to get Bryn's take on Tesla because Adam Jonas, the influential analyst at Morgan Stanley, has a new note out today. We'll tell you what he is saying. And later, we do have a halftime exclusive with Ares Management co-founders Michael Arrighetti and Tony Ressler. Looking forward to that. They'll join us from that firm's Investor Day. We're back in just 2 minutes.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Microsoft, did that pull back a little bit? Microsoft. Looking for a pop higher. A little BC pivot on Microsoft. Watch that BC pivot. Okay, let's take a look at the 60-minute on Microsoft real quick. All right, so what can we glean from this? Well, if you take a bullish trade, you always want to be above the rising 20 EMA, the green line on a 60-minute. If you want a bearish trade, you want to be priced below. Let's take a look at Heiken Ashi charts. Heiken Ashi clearly giving us bullish signals. So dips, looking for dips to get bought. S&P still sitting here chopping around. Microsoft probably pulls back a little bit. It's lunchtime. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 12:22 on the East Coast, the best coast, the coast with the most. It is Tuesday the 21st, and we're just watching some of these FANG stocks, which really blew it out today, showing strength that we've been paying attention to since it broke out last week. Okay, broke out last week on, what was that, Tuesday, Wednesday, flag Thursday, Friday, following through again, up over 50% from the October pivot low that we saw last year, 2023. Momentum, MACD is still very bullish. Look at stochastics, how it just keeps staying embedded like it did over here in November when it just kept running up. Again in December, made a higher high. Again in January, February, where it made even more higher highs, and then went sideways as MACD started to drift lower. Notice the difference during the consolidation period between February and April into March. Notice MACD was just drifting lower, drifting lower. Is MACD doing that now? No, it's not. It's continuing higher.
Morgan Stanley reiterating his overweight today, wants investors to pay close attention to that June 13th shareholder vote over the pay packet for Elon Musk. How closely are you watching it? Is it in any way in your mind a binary event in how you'll think about the stock?
If they voted to not give him the compensation, yes, I think that will pass. To me, it doesn't make sense that they would say no to that. So I think it would be binary if they voted no, but I don't think that's going to happen. I think also today I saw, Pepsi announced a partnership with Tesla.
Nice.
As I said before, I think the next quarters are going to be murky. key for the stock.
Aaron, who was that? Who was the guy that we were talking about with Tesla? We were talking about Tesla before, right? Ooh, who was that investor? What's his name? What's his name? No, was it Edmund or was it Aaron? Somebody mentioned Tesla. Remember when very well-known investor came out? It can't. It slipped my mind. Slipped my mind. Who was it on Tesla? Ron Barron. Ron Barron. That's probably he's probably one that could be buying something like that big. April. Okay, so that looks good. Tesla looking for the follow through. Nice follow through.
I don't think exists today, right? So I think you could clarify if I'm wrong. That's a much longer term time horizon. I just think this is a stock that right now is in a downward trend, murky for the next 2 quarters, but I'm bullish longer term. So
Ron Barron.
I'll sell calls and just like trade around that.
Okay, not in a downward trend is Toast. Josh Brown, up 90% in 6 months. Today, the price target gets maintained at 28, and the stock did get downgraded. Too neutral from outperform at Baird. They love the name, they love the story, but it's had a huge run in recent months, as they point to. How can we think about this now?
I think that's a fair statement. It has had a huge run, but it's actually cooled off lately. The RSI is now down to 57. So it had a big rally. It looks like it's consolidating that. We're about 6% below the 52-week highs, but we're still 8% above the 50-day moving average, 30% above the 200. So we are firmly in an uptrend, but stocks go double and then double again overnight without that big of a fundamental change. And really, what this company is doing is when they report earnings, they're just letting you know what their progress is on further penetrating their total addressable market, and they're doing great. So I'm going to remain long here. I don't need it to keep rallying the way it's been. It's perfectly fine if the stock takes a breather.
IBM looking forward to break above 175 this next couple of days. Nice breakout today. IBM looking for Boeing to go green on the day. AMC pulling back a bit. AMC. Celsius trying to push higher. Celsius. Dell continues to make higher highs.
In a letter led by Senator Amy Klobuchar, the bipartisan group argued F1's management may be violating antitrust law by denying Andretti's bid to enter the sport in 2025 and 2026, even though the sport's governing body approved its application.
Thank you, Paticus. Eli Lilly getting approval. Pharmaceuticals were strong earlier this morning, too, so this looks good. Breaking out to new highs. Volume. Dell looking good. Dell. Dell. Dell highs of the day. Let's look at Dell. Okay, looks like we could see a breakout. I'd love to see a move above 155. Give us a bullish engulfing candle. That'd be nice. Need to get above 155. 154.60 or so. 154.75 would do it. That's a good one there, Ron. Rob, that's a good one. Dell, yep, still going. Going. Look at Dell. All right, looks good. Disney's up a little bit today too. Disney 103. Okay. Dell. Okay, Dell. Oh boy, hope everyone's having a good day.
We are back on halftime. Ares Management holding its annual investor day today. Our own Leslie Pickard is there. And join us now with a halftime exclusive. Leslie.
Scott, thank you. Yes, I am here with Tony Ressler and Michael Arrighetti, the executive chairman and CEO, both co-founders of Ares Management. And it's a big day for you all. This is the 10-year anniversary since your
aspirin causes brain bleeds, causes stomach bleeds, and it causes eye.
Ares stock has grown 650%. Tony, I want to start with you. As you take a step back, how would you characterize the firm's history that influenced your relationship?
Well, again, we look at the 10-year history of being a public company, maybe 25 years as being a company at Ares Management. We've had a long and remarkable road, but the past 10 years, I don't mean to sound completely confused by it, but please understand, I did not expect that our market cap would go up 10 times over the past 10 years. I didn't think our FRE or operating income would go up 10 times over the past 10 years. I didn't think our assets under management would grow 5, 6, 7 times. What I did think is we were a really good company when we went public. And I thought we had an ability, and that combination.
Okay, VIX popping up a little bit. VIX, so volatility picking up a bit. Tesla still sitting here at the highs. All right, nice follow through.
Has really built upon itself. And I must say, I'm so proud, so delighted about where we are. I don't know if I'm surprised or just excited and proud, but I must say it is a really, really good company that we have a lot to be proud of.
And Mike, you all set targets today, 5-year targets. In fact, you said you expect to grow AUM organically, not through M&A, to $750 billion by 2028. That represents a CAGR of more than 12%. Do these targets still hold if there's a recession or some sort of black swan event? And I ask this because a 5-year target is a pretty long way into the future.
Yeah, the fact that we're actually willing to project out 5 years, I think, says something about the conviction that we have on the results. What's interesting about the forecast we put out, we did put out a $750 billion AUM target, but I think as importantly, we said that we would grow our distributable income 20 to 25% and our dividend 20% plus. And the reason we have conviction to your question is the business is designed to perform in any market environment. And in fact, if you look at our history, the two times where we've grown the fastest were during the GFC and during COVID. So there's a lot to the structure of this business in terms of how people give us capital and how we invest that gives us that.
All right. Let's see. It looks good. Tesla, Nvidia,
yesterday.
Meta.
Chairman and CEO Jamie Dimon, he spoke about private credit, and he said, quote, a lot of those folks who took private credit loans will be stranded when the, you know what, hits the fan, because they can't roll over a loan at 14%. Their company won't be able to afford it. He said banks work with borrowers in a crisis, but in the, quote, mark-to-market world of private credit, they have to, as a fiduciary, book it at par. So he says basically private credit hasn't dealt with high interest rates, hasn't dealt with the recession, and it hasn't dealt with high spreads. What's your response to that?
False. Look, we've been investing in the private credit markets for 30 years. A loan is a loan, whether it's held on a bank balance sheet or held in a private credit fund. Private credit funds are largely unlevered. Banks are 10 to 15 times levered. Private credit funds are equitized by long duration capital from institutional investors. Banks are equitized with short-term deposits. So I think there's fundamentally structural differences that change behavior. If you look at Ares, and we talked a lot about the strength of our credit performance, we've invested $150 billion into the private credit markets since we founded the firm, and we had a loss rate of 1 basis point. So everything that we've seen over the last 30 years would indicate that the risk that people are
What's Netflix doing now? Netflix. Okay, consolidating, coming back to VWAP. All right. Google. All right, below VWAP again. Looking for a follow through. Meta below VWAP. Nvidia above VWAP. AMD above VWAP. All right, watching Nvidia. All right, I'm going to take a couple of minute break. I'll be right back.
Well, generally speaking, I think what we see in our portfolio are companies generating positive cash flow. So we're seeing a really decent economy out there across the portfolio. But back to the original point of where private credit was and where it's going, really since over the past 30 years, but really since the GFC, assets have moved off the balance sheet of banks, which are generally short-term liabilities that maybe shouldn't be that much of an investor in long-term assets. And they've moved off the balance sheet of banks onto long-term investors, onto the balance sheets of firms like Ares and our investor base. And ultimately, this marketplace is growing even bigger than people appreciate. It's growing in the US, it's growing in Europe, it's growing in Asia, it's growing in corporate assets, it's growing in real estate assets, it's growing in infrastructure assets, it's growing in asset-backed security. So generally speaking, this world of private credit, irrespective of what some folks might want or wish or hope for, this asset class is even bigger than people appreciate today and is going to get far bigger over the next 5, 10, 15 years, and for good reasons, and for reasons that will actually reduce systemic risk, because these assets are going on to the balance sheet of assets of companies that are not highly leveraged and that do not finance themselves with short-term liabilities or customer deposits. So again, this all makes perfect sense since the GFC, as you highlighted the difficulties in certain types of financial institutions investing in long-term assets.
Although some would say that leverage in the system, comprises the NAV loans that are out there, net asset value loans, and other interconnectivities with the banking system who are providing some of the financing and so forth. You still don't see a systemic risk from the broader system as well?
There are bad actors in every asset class, and there are people that utilize too much leverage in virtually every asset class. But generally speaking, Ares Management is an unlevered manager, modestly levered, and doesn't require customer deposits or insurance. Large banks are generally 10, 12 times leverage with customer deposits, with government insurance, that have a different level of risk and therefore should have a different level or different type of balance sheet and investment base, and they do and should.
Mike, what do you make of the retail strategy as well as a huge component of your growth strategy? You say in today's presentation that people with $1 million or more in investable assets, they comprise about 3% of alternative asset penetration, and you think that will grow to 6% in 2028. How does all of this factor into kind of that growth strategy surrounding retail, especially as it grows? It will likely get more attention from regulators as well.
Yeah, I think what we've tried to build at Ares is a diversified capital base and a diversified growth engine. So when you look at the funds that we manage liquid traded funds, we manage semi-liquid non-traded funds, institutional funds, et cetera, et cetera. I think the rise of retail is an important megatrend because what it does is it now gives access to everyday investors, access to alternatives that used to only be the purview of institutions. So this idea of the democratization of alternatives is really important, right? There's been a meaningful shift in people's ability to support their retirement as the population ages. So not surprisingly, they're finding their way to these type of structures. At the end of the day, what's going to tamp growth in this industry, or at least moderate it, is are there enough quality assets that we all can originate and structure to deliver outcomes to the investor? So we're incredibly enthusiastic for the growth in retail, and you saw the projections. But mind you, that's growing to some extent, at the expense of our institutional franchise as we diversify. So I think you have to look at it in the context of broader market growth rate and not just isolated to retail.
No, and why would retail be any different, if you will, from endowments or foundations or pension funds or sovereigns? Some might have 30, 40, 50% in alternatives. Retail, we're arguing, would be 3% going to 6, 7, 8, maybe 10% over the next several years. I think a pretty reasonable assumption.
I believe my colleague Scott Wapner has a question for you both in studio.
Thanks, Leslie. Hi, gentlemen. It's great to have you on our program. I've been thinking a lot about sports as an investable asset. Michael, obviously, congratulations to you on the Orioles. You're now one of the owners.
Thanks,
Tony,
Scott.
for our viewers who don't know, you own the Atlanta Hawks of the NBA. As I ask you this question, the NFL is actively considering, and they will this week in their meetings in Nashville, decide whether private equity can be investors in their teams. And Tony, I'm wondering how you think about that as a possible opportunity for Ares.
Well, I think there's no doubt that the NFL, I hope, is a real possibility for Ares and for our sports and media funds. And for what it's worth, sports, generally speaking, the media and sports world is a much larger asset class that people really appreciate. I mean, this is hundreds of billions of dollars of not just value and, frankly, lendable assets, but the ancillary assets, the stadiums, the arenas, the real estate developments, ancillary businesses. These are all huge opportunities that private equity and private credit will undoubtedly be a meaningful part of. I would also suggest that the other relevance is that the sports world, as people appreciate global media rights and the value of these franchises and the importance and value of the overall assets themselves, will dramatically push to improve management and expertise in these businesses, which really historically haven't always been very well run. And you're seeing a massive transition over the last 10 years, and I would argue over the next 10 years, to far more professional management and really improve margins and operations and actually revenue sources. So that's all part of the game, I think.
Mike, how do you think PE firms would view being passive investors? I mean, it's just not something you guys normally, that's not how you roll, right? You guys like to have a say in the operations of the kind of business that you invest in. In this case, certainly in the NFL's case, you could only be a passive investor.
I'll say two things. One, we're in the business of delivering investment outcomes to investors. And so given our capability and track record in sports investment, both professionally and personally, just granting access, I think, is a huge value proposition to the investors. But I'd also encourage you to think about what we've been able to do in our credit business, where we're not a control investor, but we have significant influence over the portfolios, and we can give them access to best practices that we see that they otherwise couldn't. So my hope and expectation would be that if we were involved in this effort going forward, through our skill set, we would be able to deliver some of this expertise and track record that Tony's talking about, just in terms of engagement and influence without necessarily having control.
Yeah, Tony, how would you think about
making businesses
Oh, go ahead, please.
Go on, I'm sorry.
No. You finish your thought. Then I'll ask you.
No, I was just adding to Mike's point that making businesses run better is what alternative asset managers, what private equity folks, what private lenders, what they try to do with or without control. And I think many of the leagues will appreciate that.
How would you think about sort of your return on investment, though, and potential exits? You, Tony, may want to realize your gain or return faster than would be typical, per se, in the NFL. How would you think about that?
Well, again, I think what the NBA has already introduced, and certainly the MLB and the NFL are moving towards, is you have private equity investors already buying minority pieces of teams. So I think what you'll find, an increasing number of institutional investors and frankly, an increasing market in minority investments for franchises in virtually all of the major sports leagues. And that, of course, creates a bigger market, and there'll be far more liquidity for both control and non-control owners as a result, better investment environment.
Yeah, I would liken it, Scott, to just the growth that we're seeing generally in the secondaries market, right? Where a whole ecosystem of capital solutions is beginning to form to grant liquidity to investors in illiquid assets or owners of illiquid assets. And I would expect the sports landscape to develop on a similar path.
I appreciate it.
Wonderful. Well, thank you both. Thank you both so much for being here today. Tony
Thank you for
Ressler,
joining us.
Mike Arrighetti, at your Investor Day.
Thank you.
Thanks for having us.
Look forward to following your progress. Appreciate it. Scott, I'll send it back to you.
All right, guys, I appreciate it. Leslie, thanks so much for that. Coming up, Bryn Talkington's making some moves in the crypto space today. Tell you the trades next.
I'll be with you in a minute. Just check in. Super Micro.
Getting necessarily the economy or expectations for economic conditions is weakening to the extent where we have to be worried, but also easing off those most recent upper levels where it kind of sparks some of those inflation concerns.
Yeah, I don't even watch average gas prices because those don't matter because we live in Chicago. So we're so much higher than those. All right, great stuff. Appreciate it. That's Ben Lichtenstein, senior futures contributor here, breaking down markets and crude for us. Now let's bring in George Tillis, senior markets correspondent here. George, we're talking Toll Brothers, the home builder. Their average selling price is $1 million, and they pivoted, George, recently to building more spec houses as opposed to building when demand is there, and that's actually helped them out because there's no inventory out there, right? Maybe we don't have George Let's work on that a little bit. Kevin, let's get into a little discussion here about Toll Brothers. As I mentioned, just off all-time highs, it hit a couple sessions ago, about 135, but $1 million house.
The higher end homes.
Higher end.
And remember, they build them around golf courses, and they build them around lakes, and they build them around more high end things. And how about this, Tom? Their deposit to agreement conversion rate, 76%. That's up 900 basis points. 25% of their homes are in all cash, and the average deposit now down payment 33%. So all those numbers are getting better. And you mentioned the spec homes. The new demand is allowing them to increase the number of spec homes. So this is a company where the overall migration of home shortage and people wanting to trade up in homes is coming right at Toll Brothers.
Yeah, last quarter, they delivered, 1,927 homes. Expected Q2 this quarter, 2,400 to 2,500. So those expectations are, expected to rise along with deliveries. The backlog value was over $7 billion at this point. Let's see if we have George back here and try and get George. Let's bring you back in here. We got your mic fixed up here. Give us your breakdown here on Toll Brothers, because Kevin mentioned some positive things there too.
Yeah, I mean, I think looking at Toll, obviously the per unit purchase price for single family homes that they sell, which are on the luxury end, are quite high. But I think a catalyst that Toll Brothers, behind the scenes has been, quite successfully adapting to is the change in what's going on demographically. I think not necessarily the importance for the business right now is the backlog, which we know is probably going to continue to increase. But I think there are other communities, which include their adult active communities, their apartment communities, their luxury town center communities, even campus communities are other areas that they're developing outside of the single family housing market. So I think this is another catalyst for this particular company, alongside, again, high price points, which have been really very profitable for this particular company. They're operating, if you look from a profit margin standpoint, about 400 basis points higher than their 5-year average. And this has been going on the past couple of years. So I think this particular company, outside of the lower end consumer, which is still struggling from the standpoint of backing out of deals, I think one of the metrics that will be important for analysts to consider looking at, and probably they'll denote this in their conference call, is looking at the deposit to cancellation factor ratio. And actually, Toll Brothers has a very high ratio, which means that those who put down deposits, about 3/4 of those folks actually commit towards making the purchase of the home, where that's not the case for some of those other medium tier home builders like Pulte or D.R. Horton.
George, you look at mortgage rates, over 7% for a 30-year fixed mortgage at this point. I mean, when you look at somebody that's buying $1 million on average home from Toll Brothers, kind of push aside that they're doing the spec homes now. That's actually spurring demand because there's not a lot of inventory out there. But you start looking at gross margins rising. The backlog continues to increase. Is that the benefit for this type of company, where, hey, they don't need to build a multitude of new homes because the gross margins continue to rise in the environment that we're in?
That's the thing. That's why I think the margin is extremely important for this particular company. I think the high price point marketplace, obviously there's going to be more challenges, more square footage built on land. So therefore, the supply of this end of the market is going to be relatively steady over time. So in essence, prices are going to remain relatively firm, and that's going to trickle down to, on a per square foot construction cost basis, higher margins for the entire business. So, I mean, if you look at the margins for Toll Brothers, they're actually one of the better performing gap margins, if you will, than some of the other smaller home builders out there. And I think that has to do with the fact that they're selling higher price point products, but less volume. So it's based on the elasticity of demand. We know there's still demand for housing. It's still growing, irrespective of interest rates. The higher end or wealthier demographic home purchaser, if they're moving up, typically is less sensitive to the interest rates. So I think that's important here for this business. But nonetheless, I think Toll Brothers is very innovative. They've actually expanded on their multifamily or multi-unit housing construction developments. Like I said, luxury apartments, that's also part of their business now. As well as if you think about baby boomer demographics, forgive me there, adult active communities are also in high demand.
All right, great stuff. Great backdrop for us here. Appreciate it. That's George Sellis, senior markets correspondent here. Kev, let's get into the trade. Option markets pricing in a plus or minus $5.50 move either way in the shares. So volatility is relatively elevated. This isn't a highly liquid name, so you got to be careful about price discovery. But I looked at a strategy. I looked at that 135 level as the all-time highs that we hit just a couple days ago, and I pinpointed that along with that one standard deviation move of about $5.50. So I looked at an unbalanced call butterfly here to the upside in the May 24th weekly series. So really short-term positioning, just 3 days. If you're bullish on this name and you think it's going to go back to those all-time highs, this may be a way to look at it. Buying one of the 130 strike calls, selling two of the 135 strike calls, and then buying one of the 137 strike calls. So on this one, you're paying roughly about $1.40 debit. It might be a dime higher than that right now. Stock has moved a little bit higher going into the report. But to take your break even, Kevin, you're only paying $1.40. There's your risk, $140. Break even, $131.40. That's about $1 above current share price. So you don't need a massive move on this one.
You're buying an at the money call and selling two out of the money and then buying one further out of the money. And it's a $5 vertical, $2 vertical. So you've got that upside exposure. It gives you a delta of about 12 and a half, but you're looking for a move. And you're right, Tom, you're right in line with the old high, which is 135.37. If it makes that move up there, that's right where your short strike is.
Yeah, the apex is right at that short strike where you sold two options, the 135 strike call. But Kevin, if you look at this risk reward, even if it does go above the 137 strike, it's still more than a double as far as profitability. And this is pretty inexpensive for a play to the upside by offsetting some of the costs by doing a call butterfly skewed as opposed to just buying the vertical.
Yeah, what this does is it allows you to not have that peak that goes up and comes all the way back down to zero. Now, it's directional, right? You need the stock to move up because that's why it's got really...
All right, watching Celsius on the move.
You're just about a $0.50 in the money.
Celsius trying to break higher.
You're just looking for a move towards the 135.
Yep, the 130, 135 call vertical in that same option series, trading about $2.20. So you're saving some of your costs and risk on this position by doing the
Celsius trying to move higher. Celsius about to go.
Good way to look at a trade if you think it's going to go higher. And on the reverse, if you think it's going to go lower, maybe an unbalanced put butterfly using that same 130 going down to 125 and the 123 strikes on that. So good look at the call butterfly there in Toll Brothers going into earnings. That's going to do it for us today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing, that's coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen
All right,
the
Celsius
immersive
watching.
online
No follow
education
through yet.
Crafted just for traders. Also, you can trade brilliantly.
First Solar, nice follow through.
It bodes well for the stock at 1.2 times book.
Been biting my tongue for the last 59 minutes and 30 seconds. Josh Brown, did you ride a horse to work today? The Jolly Rancher, that's your new nickname.
Moderna, new 52-week high here on my radar. I'm not willing to stop. No real resistance until that 200-day moving average at about 160.
Okay. Brandon, what do you got?
Palantir, this company's at a huge inflection point. They just had their sixth quarter of positive GAAP earnings. Great name to go into NVIDIA.
From the rancher to the farmer. Oracle. All right, thank you. I'll see you on Closing Bell Exchanges now.
And it's a big hour here, Scott. Thank you very much. Welcome to the exchange. I'm Kelly Evans. Here's all what's ahead. Microsoft's Developers Conference underway with CEO Satya Nadella giving the keynote right now. We will continue to bring you all the headlines from that event as we get them, get some reaction as well. And the tech-heavy NASDAQ is just fractionally higher now after hitting another record high yesterday. We're on record close watch for the NASDAQ and the S&P, while the Dow is on pace for a second positive day in 3. Quick check of the 10-year shows it just around the 440 level, even as we've heard from 5 Fed officials so far today, all conveying kind of the same message. The path down to 2% will be longer than expected, and it will be bumpy. Here's where that puts market probabilities right now. First cut expected to come in September. Let's see if that changes. After our live and exclusive interview, Steve Leisman is standing by with Fed Governor Chris Waller. Welcome to both of you. Steve?
Kelly, thanks very much. I am here in Washington with Fed Governor Chris Waller. Governor Waller, thank you for joining us.
Thank you. Hey, by the way, I hear birthday wishes are
thanks very much. That's not on the agenda here today. We've got a lot to talk about, but thank you very much. Can we dive right in and talk about the inflation dynamic as you see it? How was 2023 in terms of what has been called really the solid progress that was made in inflation differed so far from 2024? And how is the dynamic going to work this year?
Yeah, so I would say 2023, the second half of the year, we really did see a lot of unwinding of supply side problems. We also saw a large surge in immigration that wasn't really appreciated until much later. And that did a lot of things. One, it had a very positive effect on growth, employment, but at the same time, prices were coming down, which you typically would think would happen a supply side. But the first quarter of this year, what we're staring at now, kind of looks much more like demand side. So I've kind of argued in the past, a lot of supply side stuff, except for the immigration, is kind of unwound. And so what you're staring at now is much more demand. And that's where policy is going to have bite to kind of bring the economy back into a more moderate state and bring inflation back on the target.
So to the extent that you said this morning in your speech, you expect inflation progress to continue. Is it from the demand side and the weakening demand that you expect progress to happen?
Yeah, that is my view. Others may not, but that's my view that demand, the supply stuff is pretty much running its course. It's kind of hard to appeal to pandemic supply side problems. But every firm I talk to, like, no, supply side's not really the problem. So in that case, it really is demand. And in that sense, it's just, strong consumer demand, basing that off of a very good job market. Their jobs are secure, there's real wages are rising, and that gives you confidence to consume, particularly in the middle and upper groups. Now, some of the lower groups would see a little more stress.
But you've seen some weakening overall in April, and that you think helped bring down the inflation numbers?
Well, the inflation numbers, they're kind of middling around the 0.3 monthly numbers. That's why I was joking this morning. The second digit seems to be a big deal, whether it's above 0.3 or below 0.3. But I think it will, whatever we saw happen, we're going to see policy start to put more downward pressure on demand. We're seeing it through the labor market. We're starting to see it in surveys of manufacturing, non-manufacturing, thing we mentioned this morning. So I think keeping the policy rate where it is, it's restrictive. That'll continue to sort of slowly grind down the economy, but not throw it off a cliff.
Tell us how you measure restrictiveness in the policy rate.
Well, I'm going to do the standard thing. So I'm going to take the policy rate.
All right. So
Take off, you know, expected inflation year out. When you do that, those are rough.
this time of day, we're looking for BNC pivots. The S&P not doing much of anything, just been flat all day, pretty much along VWAP. As anticipated, we thought today would be similar to yesterday and would just stay in the range, as you see in the far right top. Price action pretty much in agreement for the last 5 trading days. We moved up to this level on Wednesday and then went sideways Thursday, Friday into Monday to start the week. And then today we continue to see bulls and bears accepting price right here. So we're not looking for a move up or down. We'd like to see a move higher and expect that we could see a move higher given given the breadth in the markets. Okay, so advanced decline percent is not giving us a good read. We're still above the zero line, and all of January through April, we did something similar. January through April, we stayed above the zero line and just went sideways, choppy in all cases. In the meantime, the markets continued to rise. So it's pretty much what we're expecting here. The more obvious culprit is NIMO and NAMO. The NASI and the NYSE both pushing higher. You can see in the right panel, it doesn't look like it's changing direction very much, but in the left panel, you're starting to see a slight maybe plateau that's starting to build. So, I mean, just because we plateau just means that it doesn't mean we need to pull back. It does mean that we could see more consolidation like we had between February, March, April, where NIMO did chop around a bit and the markets just continue to grind higher. You can see blue and green elder sticks, so there's nothing to be alarmed about right now. Just the indices moving sideways in agreement over the last 4 trading days.
Yeah, we'll see what the reaction looks like. Stock down a little bit today, but I was just looking at all-time high over 212. This would be like Amazon going to 145. So it's still 30% off its all-time highs, and this is your outperformer. So it goes to show, again, this Chinese bear market, it's been reported on, we've talked about it, but it's been ugly if you've been invested in this part of the world over the last 5 years.
It has, and it was amazing actually. Briefly, PBD with its high interest though, its market cap did rise slightly above Alibaba's for some time. I checked this morning; it's slightly below its market cap right now, around 203 billion versus Alibaba's 211 billion market cap. But both of that, I mean, Amazon right now, its market cap is roughly.
Boeing is grinding higher off the lows. It looks like it's trying to go green on the day. It's only down $1.30 now. Boeing.
Years in these names, so it goes to show it can be tougher than you think, despite the fact that the market wasn't long enough to sleep at all-time highs right now. Again, so PDD earnings between today and tomorrow is kind of it happens in China. Target also earnings tomorrow. This is the next one on our list. I'm excited for this one because I think it's going to give us a little bit more clarity on the state of the U.S. consumer, given a little bit more discretionary product mix. Given that sort of middling price point, not cheap necessarily, but certainly not luxury.
No, it's certainly not the
All right. So the Trump defense rested with the verdict, waiting for the verdict now. So anyone's guess what the verdict's going to be? MIR, Grover. Okay, I'm checking that out. Yeah, nice move on Mir. Technology. Okay. Live Nation, LYV. Yeah, that's one that Josh talks about a lot. And Lamb Research, they have a 10 for 1 stock split. Yeah, looking good. Looking good. Spy with flat VWAP. Now we could pull back a little bit more, test the lows, and see if buyers will show up. Not looking to get not looking to get short. Meta. Okay, Meta in the middle of the Bollinger Bands. Bollinger Bands contracting. VIX spiking up here. VIX.
Yeah, we're starting to set those hedges out there to why there could be disappointment in this impossible to disappoint situation in NVIDIA. I don't know what's going to happen, but I think it's a natural decision if this is the case from Amazon. If I was going to get a new phone and I knew that the new one was about to come out, I'd probably wait, and that's normally what I would do. Right, like right now we're also the same thing with like iPhones, where you're not going to get the iPhone 15, you're going to wait for the 16. That is especially with those burning batteries. Yes, a very, very hot phone, but we'll be diving more into the names here that have yet to report GDP as well as market volumes that have a degree of exposure to consumers in both China and here in the U.S. Also discuss some example trades. Stick around, Extra Investing will be right back.
All right, so we're just chopping around. All right, most of the FANG stocks have been fading in the evening session, afternoon. Tesla trying to hold on to its gains. Tesla, maybe it runs end of day. Apple turning up.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
On the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the 4 o'clock in the morning. We're going to always make sure you have all the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device or Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chart Master segment. So we are looking at PDD as well as Target, both ahead of their earnings tomorrow morning. But we'll start off with the one that I believe will be released first. That's PDD. Ricky, our Chart Master here. So we have a lot of thoughts on these Chinese ADRs as they oftentimes stray to one of their own tandem. But in their earnings, I mean, I do think it's expected volatility, especially we're already down about 0.8% into those numbers.
Yeah, so the price action on this one, we had this big gap up on earnings recently, back in November here, and then kind of a mixed bag since then. We had a downswing and then another big upswing, a large candle that formed on our last earnings event that took us to some highs near 148, but the move faded significantly from the open, then resulted in another downswing where we hit lows near the previous lows that were also right near our purple 252-day exponential moving average. Since then, we have traversed upwards here. You can see that we have recaptured our moving averages, our yellow 21-day, orange 63-day exponential moving averages trending upward nicely. Now you can see as well, we've broken out from this upper boundary of this triangular type pattern between our two white dashed lines here. However, there's a bit of a caveat here because we haven't really made much progress beyond those highs that we reached from earnings here. So even though we're having a rather modest breakout, we aren't really getting a lot of follow through here.
All right. Not looking for a big move today, so the S&P is just sitting here watching Nvidia. Nvidia trying to go green again. It is up 50 cents off the best levels of the session. Looking for a follow through. Earnings tomorrow after the close.
Simple moving average of volume, and we always want to keep an eye on volume, make sure that when we get a big move, there's corresponding volume behind it here, Jenny. So that's kind of the lay of the land for this one.
So as far as now momentum and RSI goes, I know that we often talk about how our RSI can kind of dip or just see some diminished activity into earnings, but what are you seeing as far as momentum here?
We are seeing a little bit of a slowdown here. It was looking like we were making our way above the overbought area, that threshold of 70 that the bulls would want to see in a trending market, a move above that overbought area typically is regarded as a sign of strength. However, we're not really able to hold on. We are down marginally today, but it's looking like we crossed back below that overbought threshold. Now our trend line here, our RSI trend line, is in jeopardy. We're kind of right on the line right there. So we'll have to see what happens if we continue to falter and if we do break through that trend line. It wouldn't be crazy at all to see us retest this old trend line right here. So we could see a test of the old resistance, which now could become new support. And we'd have to see if RSI stabilized then if we resumed our upward trajectory here. That would be an interesting situation for the bulls.
Yeah, absolutely here. And so now as far as these levels we're watching, I do think that this is setting up for perhaps some interesting movement ahead of its earnings. So what are you watching for support versus?
Well, I looked at a couple things on this chart here. We've got our volume profile study. You can see there's some pretty heavy trading between about 140 to 147 here. So this is an area that could be a congestion point for price to work its way through. We also have our standard deviation channel study. We've got our blue line, which is our linear regression line.
All right, not much going on.
And that's right about where we are now. So this is an idea of fair value here. This is kind of telling us that prices kind of where we would expect them to be based on this study here. Now, this is a resistance area to overcome here. So, and we are not managing to make our way above it just yet here. It's also quite close to these previous highs that we reached after earnings. So this area near 147 to 148 or so could be a resistance point. We've also got these highs just a penny shy of 153. That's another point to watch. To the downside, we've got our our old trend line, like I mentioned here, that could be a supportive area. If it doesn't hold though, 21-day EMA here, 136.60. Then we've got this gap that we've got the post gap lows are quite close to our orange 63-day EMA, like 120, 129 to 130 or so.
Okay, so lots to look at here with PDD now picking up some selling to the downside here. We're down about almost 1% on the session. So with all of this in mind now, Alex, walk us through how you think through an example trade.
Yeah, if you look at the relative outperformance amongst its other Chinese peers in the publicly traded markets, you may see that continuing. If you do, I look at a strategy going into earnings that will benefit from that. So what we looked at, as we pull it up here on the screen, we'll look at is selling a put vertical. You can see the risk profile here, pretty straightforward in how it performs. Stay above the short strike, which in this case, for this Friday declaration, is the 139 strike. $3 wide, so we defined it with the 136, but stay above 139. Max profit is the credit receipt. In this case, that's $100. It does break through. The risk is defined below 136, limited to the width of the spread and the credits. That would net out to $200. And then 138 is the break even. This is going to be within that market maker move, of course, doing some math using the current option prices and spitting out a one standard deviation range. But it's a directional strategy. So if you see that uptrend continuing, you see that relative outperformance continuing, this is maybe a way to do so with some strategy, risk definition, and a 2-to-1 risk reward, so slightly probabilistic as well. But certainly potential for this to be fully in the money, and therefore that's why it's risk defined, and you're limited to just whatever your max loss is, which in this case is
And perhaps maybe optimistic way to play into PDD's recent price activity, but now to look at another day that has seen its own set of weakness, and that weakness is really accelerated last year. I'd say it's trying to ease into this year, but we've also fallen considerably after its last earnings report. So walk us through this chart of target here. This is one of the last of the major earnings that are, I would say, still move the overall market.
Yeah, we had this strong gap up 2 earnings ago and then last earnings as well here. Today we're finding ourselves in a situation where we've almost closed the gap. We're about the lows were, I think, 9 cents away from closing that gap.
Just watching price action do nothing. There's nothing to do here. If you got things to do, errands to run, go run some errands. Looks like we're in agreement with price over the last 5 trading days. We popped up to these new highs on Wednesday and then went sideways for the last 4 trading days. So bulls and bears are pretty much in agreement. We've got breadth with NYSE and NASI summation indexes both crossing over 2 weeks ago Monday, leading us to believe that dips will continue to get bought. For now, we're just in agreement with price at the highs. We are pinned near the 5,300 major gamma level on the S&P 500, and pretty much nothing to do at this point. Individual stocks, there's a few that have been moving. Netflix earlier, Microsoft pulled back a bit. Tesla, Apple's starting to turn up again. Apple's starting to, it's starting to turn. Apple watching that one. Starting to turn up, Apple.
Yeah, and one thing about the price action at the highs, you can see that we had higher closing prices heading into those yearly highs. RSI was showing bearish divergence. Price was trending up, RSI was trending down. So that's a sign that momentum was waning even as price was making new highs. The pace of the gains was slowing down. In this case, it did result in a downswing here. Certainly not a crystal ball that tells you, magically when something like that is going to happen here, but it's an important clue and it's worth noticing when you see momentum kind of grinding lower. So now we can see that we had a trend line on the RSI, this red line going downward here, stopped just short of going into the oversold area. Then we kind of righted the ship and made our way back upward. Once again, couldn't really clear an important mark, which was the 50 midline there. We peaked our head above it and then made our way back down into the bearish side of the spectrum here. Now RSI is breaking below this trend line today here, although price is holding on at the supportive area here. So we'll have to wait and see if this is a clue for further downside here, but not necessarily what the bulls would want to see.
Yeah, and I would say that's been a long-standing theme, unfortunately, for target shares. As far as some levels we can watch here,
All right, Apple trying to push a bit higher. Apple.
And then another area that stood out to me was this light green line here, 144. That was a point where we hit some highs in a bit of a range that we had right here. Then we broke above it, and then it was a subsequent low point. So that's the kind of thing you want to look for in these areas where price stops repeatedly to the upside and the downside, especially here. So 144 could be another area to watch. To the upside, we've got our moving average confluence, and that's also right on top of our downward sloping trend line here. So that could be a key area near like 161 or so. And then we've got some highs right here and right here as well. We're like 165 and 169.
Okay, so lots to look at here as well. We're also making moves to the downside, actually very similar to what we just saw in PVD, down about 0.8%. So now with all this in mind, very different chart, but also earnings actually similarly same time and same price to move it to the downside today. But with that in mind, it's been more of a more recent painful story in Target, I feel, even though it's trying to recover. So say you were leaning into a more bearish way of thinking, for an example.
Yeah, Rick highlighted that gas to blue line around 144. The market maker move target similar to that level as well. So I looked at a 145 foot calendar, selling Friday, buying next Friday. With that in mind, we only have the risk of the debit spend. So this gives us 25.
All right, Meta starting to turn the corner. Watch Meta. Meta's starting to turn as well. Meta turning off the low. Okay, Meta might be an opportunity. Amazon. Let's see what Amazon looks like. Amazon pulled back. Amazon. Amazon. Okay, Amazon sitting on the 50-day. We need to see a follow-through day tomorrow to do something. All right, Meta's turning the corner. Watching Apple as well. All right, back into the range.
Available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Nice little bounce back. All right, there goes Apple starting to move a bit more.
about the course of the last year, 2 years even, I'd argue at this point. But here to tell us more on some of these positive developments with its various drugs and treatments, I'd like to welcome in Dan King-Hall, Senior Markets Correspondent for the network. So, Dan, walk us through these several headlines that I saw that are definitely positively impacting Eli Lilly, of course, today.
Yeah, I've got a couple of headlines. The big catalyst being some progress in the green line for Eli Lilly's tirzepatide in China. This is news that regulators have approved it for treatment of type 2 diabetes. What is tirzepatide? That is the name behind what we know as Mounjaro or Zepbound. Mounjaro obviously used here in the U.S. to treat diabetes, also has been used off-label as well, but Zepbound is what was approved of to treat for weight loss treatment as well.
All right, so nice move. Meta, nice turn. Shorts covering. Tesla turning now. Tesla turning. Tesla going again. Tesla starting to turn, looking for a pop to the upside. Looking good. Nice bullish candle on the daily. All right, we're making a new high. New high. Tesla running. All right, there goes Tesla. It's like somebody came back from lunch and decided to start buying.
This year. So this year is up more than 35%, year over year, up 85% in terms of share price. And it really is all about their growth within this weight loss drug category. The GLP-1s have really taken over this space.
Tesla, nice move.
Is for the global market to rise to about $100 billion within that space over the next several years. So there is still time for them to kind of grab this space, and especially when you think about the Asian markets, because they've been growing in the U.S. over in Europe as well. Time now to take a foothold in the Asian market. So this is a huge green light for the company, paving the way for more growth in this space. Of course, Eli Lilly also had a phase 3 study of patients with Crohn's disease. There was some progress with regard to that. But the big attention today is really on the weight loss drug category and this approval in China. Okay, so Danny, I did see this headline that there's like this Crohn's disease development, which is huge, obviously widespread, but it's like, I have to imagine that exactly what you just said, we're only seeing the strength tied to the expansion of these GLP-1 drugs in China, because I just have to imagine that that's really what so much of this hype has been tied around, and I cannot discount how important, obviously, their developments outside of this are, but it just feels like that's what the market really likes right now. Yeah, the market really likes that right now. That's what they're paying the most attention to. What's the latest with tirzepatide, and where is it going next for growth, right? Because, as it grows here in the U.S., and we know there's also the struggles that these drug makers have to keep up with the demand, especially when you think about, for instance, Novo Nordisk and Wegovy / Ozempic, and they're, just kind of struggles with kind of keeping up with production. So can Eli Lilly, especially when you think about Mounjaro and Zepbound, can it fill that hole? And, people are still talking about this and looking forward, and, you have other companies, we just talked about Hims and Hers this week, and they're trying to create alternatives. So clearly, the space is ripe for growth, not just here in the U.S., but when you go overseas as well.
So what is the impact of that as you see sort of the generics starting to hit the market? A lot of times these companies have that window, if they're the innovator, they can capitalize on things, but as things get more
Lilly, or is the pipeline just so strong?
They don't need to do that yet. I mean, they have a couple of years. So what they have to do is take advantage of the
All right, S&P starting to move a bit. There goes Tesla a little bit more. All right, Tesla definitely stretching its legs again. All right, Tesla, thank you there, Lee Star. Tesla with a nice bit of volume. Okay, looks good. Tesla. Okay, we got a 1,000,000 share block at 1241. All right, Tesla, really nice move on Tesla, right? Finally. Apple going. Tesla off the screen. Thank you very much. Apple, nice follow through on Apple.
This is super interesting context because I know a lot of indicators use utilities outperformance and have risk off, and we know there are funds and money managers, hedge funds, et cetera, that are mandated maybe to be only in long positions, perhaps tied to equities, and one of the ways that they take a risk off exposure is to go to some of those lower beta sectors like utilities. So you would see that kind of comparison between utilities and tech sector and then outperformance or underperformance as being something that can indicate risk off. Sounds like you're kind of saying that the two might be correlated because of the changes in technology leading to more use of some of these utility services.
Exactly, yes. It's just building the foundation of the AI ecosystem as a whole. We have seen the infrastructure play when it comes to Taiwan Semiconductor and NVIDIA, moving in everything, yes, and now the talent is looking more down the road. What else can you do to run these AI models through the AI intelligence? So there's a lot of optimism when it comes to the electricity use. You can also see that out when it comes to natural gas, which is also seeing displacements to the left side. A lot of optimism on natural gas consumption being skyrocketed because of the demand for electricity, and natural gas is actually the largest component that we use to generate electricity as of this time. But the last thing I will kind of note, normally those kinds of museums of electricity generation is really beneficiaries of this AI boom, if you will. It's actually still going to be renewable energy, looking at 60 to 65% of the extended
Nice move on the S&P, Tesla, Apple. Apple still wants to go some more. AMC is starting to turn. AMC. All right, nice day. Turned out to be a nice day in the afternoon. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, the 21st. Rather kind of boring morning. Some stocks like Netflix, Microsoft, Tesla did have some nice action, among others, Supermicro, Nvidia. So we're looking for the evening session to be a little bit more exciting. I hope everybody's having a good day. Okay, looking for another pop. All right, Apple looking for a breakout. Okay, SPY looks like it's going to continue. Finally breaking a bit higher. Tesla looking for to stretch its legs some more.
portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
All right, there goes Tesla again. Tesla again. There it goes.
Trading the trending names every day. It's Fast Money. Ready for you, ready to go. I'm Kevin Deacon. Next year on Fast Money. Weekdays at noon on the Schwab Network. Welcome back to Connected Investing. It is time for Under 30. We go back over to China and take a look at XPeng, XPEV, of course, the stock ticker. Joining us now, George Phillips, Senior London correspondent for the Schwab Network. George, what's going on in EV world? We talked to Li Auto, I believe, just yesterday. Now we're looking at XPeng today. Stock's making a nice move, though, which is, of course, the opposite of what we saw yesterday in Li Auto.
Yeah, I mean, I think, both of these companies obviously are Chinese electric vehicle manufacturers. We talked about Li Auto. In terms of their the report, which from a delivery standpoint seemed to have been less than expected, but, XPeng obviously today is higher based on, in this case, looks like the earnings per share that they delivered was a loss of 21 cents versus the estimate, which is 27 cents, which is, again, a market improvement compared to the loss of 38 cents for the same quarter last year. So the losses in this case are not as bad on the year-to-year basis.
All right, Tesla looking very strong. Tesla.
If you look at the growth year over year, it was higher by 62%, beating the estimates coming in around 906 million versus last year's 573 million, and they did guide higher for delivery numbers for next quarter. This quarter, which they just reported, they delivered slightly over 21,000 units. For next quarter, the delivery numbers are expected to increase, but the range is quite wide, somewhere between 25 and 32,000 units respectively. And I think, if you look at what's been going on in the entire EV segment, I'm going to put Tesla in that same of course, category, because it's primarily an electric vehicle manufacturer. Competition has been an extremely challenging environment for all these auto manufacturers, irrespective of their capital structure or their profitability profile, which, if we talk about Li Auto, even though that company is profitable, they are still facing a challenging environment from a price of underlying product issue, whereas XPeng still got an issue of profitability because, if you look at the numbers, even though there was a beat for the quarter, we still lost 21.
All right, S&P still going.
For the full year, the estimates for 2024 are still a loss of about $1.12 a share, and even going out to 2026, I mean, it's skipping 25, but they're still expected to lose about 33 cents a share. So for what I see is going out into the next 2.5 years, they're still expected adjusted losses, irrespective of the fact that sales are still expected to be next year over 35%, even going into 2026 above 25%.
Boeing trying to make a little more progress as well. Boeing. Boeing, another 90 cents to go to get back to green on the day.
Shorted, and I think that's one of the reasons why we're seeing a bit of a lift today, because of just the news reported in terms of them actually beating the estimates for both earnings and sales. Also, the guidance for Q2 delivery is actually quite meaningful difference. I mean, it was 21,800 or so units, give or take, roughly speaking, for the quarter they reported. But if you look at next quarter, it's between 25 and 32,000 units. So I think the delivery numbers are also meaningful, and that's causing the stock to move higher. But you'll notice in gap higher early in the day and has been drifting lower because of the fact that they still have a negative earnings yield a problem, which again is going to cover the shares.
And I think that's a really good way to sort of encapsulate both of these stark contrasts a bit in their price performance after their results. But appreciate the breakdown of always for Excelsior Markets Plus on for the network. That'll also be the finality myself for next gen investing for this Tuesday. Coming up next, the FD Watch List, Nicole Harvey.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction in GE Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums, unlimited ATM capabilities for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing from your convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
First Solar still pushing a bit higher. First Solar having a pretty good day. Breaking to the upside.
Trading with Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization.
First Solar having a good day. Breaking to the upside. New highs on First Solar. Headed back up to all-time highs. Okay, all-time highs. 232. Got another 21 points to go. 23 points to go. All right, Tesla doing a nice job. Tesla continues higher. Tesla.
On the way you get market news. It's Market on Close. Join me all of the way for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere on any device. Only on the Schwab Network.
Tesla breaking higher.
Good afternoon. Welcome to Watch List. I'm Nicole Kelly. Live your stock glad you are with us at 2 p.m. Eastern Time with me, Joe today, and it's Technical Tuesday as well. Kevin Horner will swing by and give us some charts of the 500 and Eli Lilly, two all-time highs there. And we'll take a look at technology behind farming. Chief Legal and Information Officer of CNBC. And we will examine those evolution stocks today. Under our restaurant today. In the meantime, here's a look at market flow from the trade today. And you can see all up arrows, right? You see some record highs.
Tesla, nice change of pace for Tesla. Tesla doing a nice job shaking off the fleas and pushing higher. Big bullish day. I haven't seen one of these in a while. ATR will turn up 750, 775 on the ATR. RSI back above 50. All right, looks good. Tesla looks good.
Yeah, Nicole, AWS and that Amazon owns, as you know, is halting the orders for the new NVIDIA super chip. Why? Because they're waiting for the
Meta, nice turn, following through. NVIDIA, making a new high NVIDIA.
Because the window, remember, in March, NVIDIA announced the new Blackwell chip that is, significantly better and faster than the Hopper chip. And because that window is so small, what AWS is doing is halting the delivery of orders for the Hopper chip and converting them all to the Blackwell chip, saying the window is so small, why not just go to the more powerful one? So, like most people in the world, Nicole, they want the shinier new model.
Yeah, makes sense. NVIDIA will, of course, launch for those NVIDIA SKUs tomorrow as well. What about Lowe's? That's an interesting focus. Your thoughts there?
Both had earnings up this morning, stock down about 2.9%. They, D.A. Davidson put out a research note after the earnings saying the gross margins were below estimates. Better than expected sales kept profits in line with consensus.
All right, SPY back up to supply. Just shy of 531. We continue to run into supply. A little hesitation at the highs here. Tesla's still looking very strong. Looking good.
Yeah, I mean, that's the question, right? We're getting a lot of mixed signals as to what's going on. The Federal Reserve, on one hand, has said that they're not going to raise interest rates this year, which there was some concern as the fact that they might do that, but they've also said, or they've become a little more hawkish in their stance for lowering interest rates as well. The fact is that the inflation data and the consumer data is softening a little bit, but it's still higher than the 2% that the Federal Reserve wants to see. So it's become recent conversation that the Federal Reserve might not even lower interest rates at all this year. We went into the year with an expectation of 6 to 7 rate cuts. Now I think it's forecast that there might only be 2 rate cuts. And I've been saying for several months now that I wouldn't be surprised if there were no rate cuts at all, and then especially in light of the fact that we have the presidential election and throw that into the mix. So there is a mixed bag. You do have to be really careful at this point, especially if you're on the brink of retirement. That's where I think the concern is. If we have a major crash right before you want to retire, then you could have some problems ahead.
Yeah, I mean, when you say 2 cuts is what you thought, it could be 0. What do you recommend the Fed do? What would you do if you were, heading to Federal Open Market Trade?
Yeah, I mean, great question. I would recommend they stay the course. I think they're actually handling it very well. I think they're handling it right. I think Jerome Powell's Fed speech is great. I think they're doing a good job. I wouldn't change anything at this point. I wouldn't lower at this point. They have to have a reason to lower. And the question is, are they going to lower proactively because the economy is
All right, Tesla, man, what a nice day on Tesla.
forced to lower interest rates reactively. So they want to be proactive, not reactive. Inflation's a lagging indicator. It is starting to soften. Consumer savings are going down. Consumer spending is going down. GDP is only forecast to be, I think, if I remember correctly, I think 1.6% this year. So that's going down. So everything is going in
Boeing, another 90 cents to get to green on the day. Boeing.
Well, that's exactly right. And what you'll hear from Wall Street is that the market goes up all the time, right? And that's true over any 20 or 30-year period of time. But there's been lots of decades or decade and a half periods where the market has just swung sideways, crashes and recoveries that are just blocking each other out, resulting in a decade or decade and a half of zero return. And we've had a decade and a half now of 15% plus return in the market. And there's a lot of
All right, SPY continuation. Boeing's been doing a nice job of reversing. Was off a little bit today. For better or worse, a flight from London to Singapore experienced some severe turbulence. One person died. Anybody know if it was a heart attack or they broke their neck or something? It's crazy. Boeing, higher highs and higher lows. Looks much better now than it did earlier. 3 steps forward, 1 step back. Buyers stepping up at the low of the day. 21 day. 21 day will cross up through the 50 day. 50 day is turning. 50 day is turning as well. 21 day will cross up through the 50 day probably by the end of the week, if not next week. Looking for 190. The next pop, perhaps 190. Boeing catching a bid now. Boeing catching a bid. Boeing starting to catch a bid, starting to go. Boeing popping.
When you talk about capital preservation, you mentioned the dividend payers, maybe a certain bond. Which bonds and/or dividend payers? How do people sort of pick what to go with?
Well, interestingly enough, almost any investment that is growth oriented can also be engineered or set up for dividends. And that's one thing I think a lot of people don't realize. You can buy bonds that are growth oriented with no dividends at all, or you can buy bonds that pay dividends. You can buy zero coupon stock that pay no dividends, or stock that pay dividends. Bonds, same thing. You can buy zero coupon bonds that are purely a growth play, or you can buy bonds that pay income. You can buy real estate to flip it and use it as a growth investment by buying it low, selling it high. You can rent it out for income. So what I recommend at Providence Financial for our clients and for people that are retired is focus on the income component of those investments, not the growth. At least you've got the bird in the hand. If you've got dividend stocks, you can count on the dividends as long as you have a high quality portfolio of dividend paying stocks. Same thing with bonds and so on. There's a lot of options that pay dividends. Bonds, preferred stocks, REITs, business development companies, dividend paying stocks, a whole universe of options that pay dividends. And I think when you're retired, it's the dividend that becomes the focus as opposed to trying to grow your portfolio. And interestingly enough, most of the investments that pay dividends are actually more conservative. So you got to get to kill 2 birds with 1 stone. Make your portfolio more conservative and get more income at the same time. I think it's a good strategy for people that are retired and close to it.
Anthony Barrow, President, Providence Financial and Insurance Services. Thank you. Up next, Technical Tuesday. Kevin Orner is back. He's going to take a look at a couple of names that he's watching. He has on his radar. And AppLovin and also Eli Lilly. Let's see what he has to say. Buckner, let's give you that back.
All right. Hope everyone's having a good day. We got about an hour and 49 minutes to go. An hour and 49 to go. If we're going to see any kind of pick up in the bid. If we're going to push any higher, it'll be usually between 215 and 245. A lot of stocks are maintaining a bid and pushing a bit higher, though it is a bit of a grind today. Markets do look pretty good. Anticipating that we could see an increase in volatility tomorrow. VIX actually is VIX is almost 11. VIX almost at 11 handle. Wow.
Ready for you, ready to go at 12 p.m. Eastern. Welcome back to the Watch List. I'm Nicole. I believe you find I'm a preliminary stock. Want to take a look at the foreign market earnings for you. What's the next day? That's something double. After the first quarter earnings, the estimates on the bottom line, 11% a loss per share. Expectations of more than 29,000 quarter.
Boeing. Tesla still going.
Its downtrend of the last few years and is now on track to the lowest close since April of 1998. Reports have suggested that Walgreens is seeking a buyer for its British business Boots with a price tag of around $7 billion amid its broader struggles. And here's what the Bitcoin right now it's holding said, not holding 70,000 anymore. 69,915 for those of you who are long. For those of you who are short, you're happy to see it drop a bit here, down 5 points. All right, Kevin Horner is back. Welcome back, Kevin Horner, Senior Manager, Trading Services, Charles Schwab. It's Technical Tuesday. I know you've been wherever you've been. You watched the S&P 500 so closely. You saw it go above 5,300. That was a big deal. Heading to new highs. Some of your thoughts on the chart there.
Well, it's always great to get away, Nicole. Glad to be back with you, of course. The market certainly has given us plenty of positive reaction to any of the brief pullback we got at the S&P 500. I mean, we pulled back briefly to that 5,000 point ledge and pushed off of it quite nicely here. I mean, we broke the 20 and the 50-day moving average both, and instead of seeing
Tesla's still going.
Short-term downtrend, we saw a nice reversal right back into the trend line. That looks great here from a bull standpoint. We've obviously had a 5-day move through that 52.65 ledge. That's the top white line I've got drawn in there. And that might represent for short-term traders an opportunity to participate if we are going to get any type of pullback here. That would be a very short-term level for a possible test. However, there's also is the possibility we get a deeper drawdown or maybe a larger pullback that could bring us to the confluence of the 20 and the 50-day moving average, and that's right around 51.65. That would represent represent a pretty healthy pullback, about a 3% pullback, but it's really hard to be angry with even a 3% pullback in the midst of what has been a fantastic S&P move. We're looking at more than 29% up on the 52-week low to the high that we just made here in the last week. So, Nicole, it's going to be hard to call this chart anything other than bearish, and we continue to look for signs of breakdowns carrying any legs of any kind, and we're just not seeing them. And so I think bulls are feeling relatively enthused and certainly looking towards what's going to likely be a pretty big market indicator tomorrow afternoon with NVIDIA reporting after the bell.
Yeah, that certainly could drive things one way or the other, but to say that this really looks bearish, it's like, ouch. I don't think people are wanting.
Nice move on Tesla.
But, no market goes straight up, right? Let's get to AppLovin. This is a name that you're following closely. What are the technicals? Are you watching so?
Well, we've noted a couple of positive moves on the heels of two recent earnings reports. We go back to the pop that we got in mid-February. We had a lovely gap off the 20-day moving average, moved up real nicely from about 45 up into that $60 range. And since that window began, we saw it moving to hug the 20-day moving average in orange. We got a brief little drawdown that took us from the 20 through down to the 50. And we actually kind of went a little rangy there. That's the two white lines that I've drawn in, giving us an approximate $13 range. And many traders will look at that range as an opportunity that can then be achieved to the upside. So they might look at the $78 former resistance and add $13 to that and giving them a target in the neighborhood of 91. That would represent a new 52-week high in this case. And right now it's in the midst of setting up a little bit of a bullish flag. Yesterday's price action gave you the close above the low day, or the high price rather, on the day it made a low. Many of our viewers know that as a Cahole, where you get that first perhaps opportunity to join a new trend. And today it's just giving perhaps what could be a little breather to the bulls who want to envision this moving higher. So, moves back below 78 certainly could be bearish, but if you're a bull looking to participate, you do perhaps have the opportunity to do so in a manner that would be consistent with a proper risk versus reward, particularly if your belief is it can get to that potential measured move target at 91. So really, it's going to be a while maybe before this gets to be looking bearish. We probably need to trade under the 50-day moving average around 73.5 for that to really be considered terribly bearish here. Looks like a potential for continuation. And in truth, Nicole, one of the things we've noted in the recent session since I've returned is a lot of these types of positions available, meaning bull flags, small pauses or consolidations after nice pops to the upside. So one of those things that's positive about that is just consistency in the marketplace. We'd like to see that consistency.
Yeah, I mean, and to your point, what a run it originally had, and there's at least one sort of blog that suggests maybe even AppLovin.
Tesla's still going. Tesla having quite a day.
I don't know that that's true, but
Up $10. I haven't seen a $10 day in a while.
like Palantir, for example, but anyhow, we'll see. Thank you for that. And last but not least, as you see Eli Lilly hitting new all-time highs, some thoughts there.
Well, this one is
Tesla plus $10.
the range. We had a 3-month consolidation, probably about a 70 to 75 point range, after the stock made a wonderful move off of the last earnings report in early February again. So this move
Buy the dip.
650 to 800 did so relatively quickly, about the course of 2 to 3 weeks. And then it needed time to consolidate. And this is very common. You move 150 points upward from a 650 point position. It is pretty good time frame to see a consolidation. We don't mind it if it goes straight up. We love participating in those. But a consolidation kind of validates the opportunity for more upside.
BC pivots on Microsoft. Probably gets bought.
And if today's breakout is valid and it can carry and hold that 795 level that's potentially new support, then bullish traders might be looking to add that.
Let's see. Microsoft, Money Magic levels.
target 870, 880, somewhere in that range. And of course,
430, 435.
that when you're doing these approximations or targets based on measured moves, these are not guaranteed. These are not foregone conclusions. They're just estimations. And then the last note is it gives you time consistent with the amount of time it took to consolidate. So we had a 3-month consolidation. So some traders might expect over the course of the next 3 months, if this is a good breakout, that they might have the chance to target that 875 to 880 range over the next 3 months. And not necessarily a bearish chart here, of course, Nicole. It would require the price action to throw you right back below 795 and then languish further for a while. That would be considered a potential bearish signal, but doesn't look like we're getting that at this point in time.
Thank you for all of that. A good look at all three. Welcome back, Kevin. Thank you very much. A great look. We really appreciate it. Every Tuesday, we have Technical Tuesday. Thank you. Coming up next, the future of farming. We'll find out how CNH is actually transforming tech in the farming space, bringing internet to some of these farmers, right? Let's hear more about that. That's ahead on our watch list.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window. Other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Kickstart your morning with a full dose of
That's what I figured.
analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device.
Yeah, that's what I figured, Carmen. Thank you for the update.
Favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Google trying to turn too. Google trying to turn. Looking for a pop higher.
Thanks for swinging by, Carl.
No problem. So,
Listen to me adjust the bass, add more guitar, maybe some drums.
wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on things.
IBM pulling back a bit more. IBM.
Oh, I gotta take this, Carl. It's Schwab.
Tesla.
Have a choice in how you invest with Schwab. Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Google, Tesla, Dell pulling back a little bit. Dell.
And still, his answer at the press conference is all focused on potential weakness in the labor market. I mean, doesn't it tell you something about where it's skewed when it comes to reacting first to what? He clearly wants to react first to weakness, then hike interest rates further.
This week on Market Overtime, author of the Macro Compass, Alfonso Peccatiello, tells us why he sees only an 8% chance of a recession in the next 12 months. Find out why his 400,000 followers on Twitter are following his Fed commentary. Catch it all, 4:30 p.m. and 8 p.m. all week long, right here on Schwab Network. And welcome back to the watch list. You ready to talk farming and some improvements that are happening in the way farmers and agriculture world operates? Joining me right now is Mark Kermish, Chief Digital and Information Officer at CNH, which just changed its ticker symbol. Is now CNH is the symbol. Tell us a little bit about what's been going on. I know you have this new great partnership with Intelsat. That must be front and center of what's going on right now. Some of the updates on CNH.
Yeah, it's great to be back on, Nicole. Thank you for having us. We are extremely excited about our partnership with Intelsat.
you think about connectivity in farming, it is really the foundation that enables all of the technology to work on the farm. And even though we have one of the largest cellular networks out there for our farmers that covers 160 countries, it equates to only about 33% of the land mass that's farmed. And so our partnership with Intelsat allows us to bring satellite-based connectivity straight to the farmer, which starts to enable both the precision farming and our roadmap towards economy.
Yeah, you were noting that by having this capability, having this access to the cloud will actually be able to give the farmers some freedom in that they'll be able to gather data. And by doing that, they can then make better decisions for their businesses, for example, right?
That's right. Farmers are in a mobile office. They're not attached to a desk. They're not sitting where there's high-speed internet access all day long. And oftentimes they're on the go in between fields and running back and forth to manage their farm. And not only need to have that data coming from the vehicle to their cloud, they expect it to be on their phone and their mobile apps within seconds. So they can log in remotely and see what a farm operator is doing in one of their vehicles. They can view how their as planted or as harvested maps are working, and they can connect to the different vehicles around their farm, including during harvest, when we're connecting and guiding both the cart and the harvester together as one unit. And that satellite connectivity is critical. And just as we saw with the solar flares that impacted some of the GPS connectivity during our planting season, our internet connectivity continues to show its importance, and being able to have both the cellular and the satellite options allow us to ensure stability within the market for our farmers.
Understood. I mean, how long will this take to, and you're doing this abroad as well, right? It's not just here at home that you're really focusing on. How long does this whole process take? Years?
Not at all. So what's great about Intelsat is they had an in-market.
All right, so Dell continues to drift a bit lower. Dell looking for a bounce. Tesla at the highs.
We are enabling some connectivity through wire harnesses and mounts to our equipment, and we'll be in market in Brazil this third quarter with a goal to roll out worldwide starting in 25.
And so with that, when you talk about this type of thing, right, it's not just as agriculture and construction.
Google following through.
Yeah, so effectively, Intelsat has dozens and dozens and dozens of satellites, and really have two aspects of it. You have your low Earth orbit satellites that provide your highest speed bandwidth, and you kind of have your geospatial satellites, which is really where our first interactions will occur with our connectivity to our vehicles. This allows for megabyte level transfer of data, which more than meets the needs of our customers, both in agricultural and construction. And effectively, they'll be able to buy this equipment straight through their local dealerships. They'll be able to manage it on a subscription base, so they can kind of go month to month, or they can get annual plans.
All right, Tesla consolidating.
Play right into the vehicle architecture that we have today. So there's very little need for them to do additional investments in the vehicle outside of adding this capability. And then as we prove this out and roll this out worldwide, it will ultimately be an option that can be ordered directly from the factory.
And where did John Deere and Starlink fit in? You noted that this will be the first in the field, right?
Yeah, John Deere and Starlink, they'll have a similar offering down the road. We had problems we wanted to solve today, and Intelsat allowed us to do that because they had the antenna and the design that could really support the rugged aspect of agriculture and construction. These are dusty, humid, cold, wet environments, and the current offerings from some of the competitors of Intelsat just couldn't stand up to the environmental conditions. And so Intelsat, with their decades of proven experience here, allow us to have a turnkey solution that can work in any part of the world and provide that capability for our farmers and construction operators to stay connected.
Yeah, exciting to watch the group of stocks too. And thank you for all of this. Mark Kermish, thank you. Chief Digital and Information Officer, CNE. Thank you. Still ahead in the second half of our show. Getting ready for those athleisure stocks. Tune up. Going to take a look at the cards with the team from Equity Set. We'll be right back.
Google trying to make a go of it as well. Google. Tesla, pretty strong day, Tesla.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalini, coming to you live from the New York Stock Exchange. Glad you're with us. Want to take a look at here at the markets. Not too far off the unchanged line. A lot of stories. Of course, everybody waits on what the Fed will do next. But NVIDIA this week, lots of Fed speakers.
All right, nice price action.
The S&P, look at this. The Nasdaq, Dow, and S&P are all up about 10%.
FANG index. Most stocks on the FANG index turn back up after the BC pivots during lunch.
Yeah, it has been exciting to say the least, Nicole. Historic levels, I feel like, always are even, albeit a bit of a grind over the last 2 days at these, again, all-time highs. So I did notice, again, somewhat range-bound activity in terms of the NASDAQ. So I think any real conviction one way or the other for the other three majors is going to be somewhat limited without that tech-heavy index playing along. And you can understand why. It's waiting for more information, right, in NVIDIA results. But let's begin with the S&Ps here in the rally that we saw yesterday kind of fade into this morning's open down to 52.97. And here you can see after a brief visit below 5,300, we're holding back above that level right now, for the most part in the middle of the range that we established yesterday. So not a lot of information here, right? Just a market that's in a bit of a holding pattern, but just off all-time highs. Again, this is really where when you step back, you're going to get some clarity in terms of what's been going on here. I mean, off the October lows, last year, you're talking about, well, this chart goes all the way back to January of 2023. And again, well-defined trend up, right? Through 4,000, 4,300. And even as I look at this,
Tesla hanging on to the highs.
High conviction, sideways consolidation. Look, I'm seeing it play out multiple times within this kind of bigger framework of that larger trend to the upside here. So we are in balance around 51 right now. Lower extreme being the lows that we saw last month, which just took out the March lows briefly, if you remember, below 5,000. Upper extreme here, we'll call it 5,300, which we're now attempting to break out of. So this is really extending that range to the upside. And again, this is not rocket science here. You do the math. We're talking 53 to 49, that 5,000 level, roughly right around 5,100. Your balance point, take a look. We're again trying to get something initiative the upside. So I think the next big catalyst could be those NVIDIA results and just kind of watching this broader market. But at the very least, no rejection is upper level, Nicole. I mean, this is a market that's pretty comfortable.
Apple looks like it wants to go some more. So does Tesla. Apple and Tesla moving higher. Apple pushing a bit higher, trying to break out to a new high today. Apple.
Yeah, above that kind of psychological level here. I've got the chart behind me. We have lost
Very tight price action here.
the S&Ps off the highs that we saw to begin the week, but still hanging in there. Right?
Tesla's still going. Tesla.
In this market right now, you're not necessarily liking this most recent move off the highs, but you're
Volume coming in on Tesla.
we're going to start off here with our price activity and our analysis of the 5-minute candle chart. We've got a few areas of consolidation that we formed along the way up here. We are currently balancing or coming out of the balance around 72. I mean, maybe what we're just trying to do is establish something a little bit more around the 71 level. If we could find some support around 7,000, but or 70,000. But hey, the way I see it, as long as we hold above 67K, still a very bullish pattern here. Again, a 5-minute candle chart, so we don't want to put too much weight into this one. But when you step back again, like we did with the S&Ps, you're going to see a very similar pattern. Again, risk on tone. You're going to see a situation where investors feel pretty comfortable right now with some of the comments from Fed officials, where the dollar is, range bound, rates which have been contained, crude oil, right? We're not really seeing that geopolitical premium come into play. If anything, prices have come off a little bit recently below 80, and that sparks some, demand ultimately for products like the S&Ps, like these stocks that we're talking about, and some of these other, again, very risk-on type products. 29,000, I've got my eye on 44,000. Look at this high conviction trade up. Now that I look at this, we could probably even establish
Really bullish day on Tesla.
stairs along this staircase type pattern to the upside here. That would come in right around 54K. You can see also how we again tested that key area and held. So currently balancing around 66 right now. I think if you wanted to kind of slice and dice that one, you can establish this area here again, as I mentioned, right around what would that be?
SPY drifting back into the pattern. Tesla breaking a bit higher.
Looks to me like the bulls are charging both the S&Ps and in Bitcoin right now.
Netflix pushing back up. Netflix.
Thank you, Ben Lichtenstein. Great to see you. Appreciate it.
Tesla breaking out again. Tesla again.
Over to some of the athletic, athleisure. Our next guest thinks this is some opportunity for you. Let's hear why.
Jeez.
Tony Zaparos with us, CEO at Equity.
Tesla going again.
Thank you so much for being
Wow.
here. So I'm looking at Nike, for example, that ran
Lots of volume coming in. Tesla.
down in December during earnings. That $92, the high was $123. That's a far way away. Where do you think this is headed in one?
Yeah, great to be here. And so with Nike, the momentum is downward pressure. However, we think it's got about 30% upside, right? Covering those gaps with the biggest and the highest being about 115. Might take a little bit of time to do so, but honestly, with the relative underperformance compared to discretionary and index names, we feel it is going to position itself to pop up at some point.
Yeah, I want to hear a little more about the Nike environment. I mean, when you think about how they sell their products, the competitive space, where does Nike stand in all of that? That direct to consumer and all that kind of stuff.
Yeah, it's had some troubles and challenges with supply chain and logistics. But honestly, we think those are just some kinks that can be worked out. And so its direct to consumer channels aren't bad, right? And I think a lot of analysts and investors, when they're looking at it, they want it to be better. And I think Nike's going to go ahead and fix those issues that are coming up.
All right, next up, and I know you're doing a lot more of the numbers and less so about, the backroom story of each one. But when you look at, for example, Under Armour, you said, they've been reducing their debt levels. That's always a good thing for any of us to be doing. Tell me a little bit about the Under Armour.
Yeah, so Under Armour is kind of the ugly duckling of the pair, and we think if management can kind of get the optics right and right the ship to push it in the right direction, that is going to be a huge value play, right? It's been battered down, and rightfully so. Its earnings that we reported last week and the coming 17% drops in sales, that is not good. But when we look at it in terms of how it's trading, right, valuation numbers, whereas Nike and Lululemon are up at 27 times, about where the market's at, Under Armour is a third of that, right? More than that, at 7. Same thing with price to sales, about 9 to 10 times for Nike and Lululemon. It's at 0.5 times for Under Armour. And so we think that it's worth nibbling and starting to kind of add it as a diversified play in the athleisure space.
Yeah, I mean, when you think about it, this used to be a $27 stock. I just pulled up a 3-year chart. and it's at $6.80 today. So it certainly has been lagging behind the peer group. And then last but not least, you have Lululemon. What's this story?
So Lululemon really's taken a big hit. It's down from, I think, about 500, over 35%, right? When you're looking at kind of the 1 year and then year to date is also pretty poor. And a lot of that was because their guidance wasn't as optimistic in terms of sales growth from analysts. And so that's where, again, two big gaps from a technical level. We think this has been oversold. Again, earnings come out next week. Not a big one on adding a lot of positions to it before then, because it could get worse before it gets better, but nibbling in our mind.
You know, it's interesting because there's going to be drivers.
Tesla's still going, looking really strong. Tesla.
Pickleball and tennis, right? I mean, those kinds of things can help. I mean, like move along, right?
Yeah, and pickleball, I'm not sure how long the craze is going to last, but it's definitely helping in the short term. And same thing, going back to Nike and the potential Caitlin Clark, right, signing of the deal. And so, celebrity endorsement, again, I don't believe it's signed yet, but the endorsements are huge. But what we really see with all of these, together they command about 30 to 40% of the athleisure space pie. And if consumer spending wanes, we feel that these are the stalwarts that are going to help perform a lot better than some of the other incumbents and competitors in the space.
When we think about, and I'll throw in another sort of thing, I've heard a lot about the Olympics and also soccer, like the Copa Cup and all these different things that can really move these things along. What are you looking for when you look at these kinds of stocks? Because, you know, they're all well off the high, but you think that they are winners. You're bullish on all three. What kind of elements within the balance sheets or the trends are you looking for generally?
Yeah, and with all these, it's looking to make sure they have cash, looking to make sure they're retaining margins, right? In Lulu's case, higher end product mix, higher margins, higher growth, right? Potential. Nike, it's kind of stagnating, but it's
Tesla at the highs.
And stable margins, which is good to see, because again, that's what's going to weather you through tougher times, even if price takes a hit in the short term with whatever fares.
AMD still pushing a bit lower.
In terms of, like you said, it was $27, 3 years ago. Now we don't think it's getting back there anytime soon, but $8, $10, $12, right, isn't out of the question if investors start to believe again. So we're looking at that mix, and again, timing, right? Not don't put all your eggs in one basket at once. Enter the position and start to build it slowly.
Yeah, I mean, I know, by the way, Caitlin Clark was reportedly in talks with Nike on a deal that was worth around $28 million. She also signed with Wilson. I saw that today. Wilson Basketball. So I guess that's a different endorsement. So you have to wait on the updates for that. And then what's your big picture on the market for 2024? How do you feel? I mean, when you're making the investments or making the strategy, is it more on the bullish side? Why?
It's trying to find value and kind of weed out value on the bullish side, and really staying away from ones that maybe aren't going to have the cash, don't have as strong of a balance sheet, or haven't been hit as much in price. And so, again, cautious. Truthfully, a month ago, and when we kind of had the 5% retracement, it shrugged it off like it was nothing, and now we're hitting new highs.
Right.
And so, again, with consumer spending waning, the Macy's report out earlier, which again, that could be isolated, but higher delinquency with their credit card holders. I just think there's a shoe to drop that hasn't yet happened yet.
You're generally looking for PE ratios under 10?
Yes, I mean, that goes against definitely the Nike and Lululemon.
Right, well, at least one of them, Under Armour's valuation, I was looking at that PE ratio.
Right, it averages it down, helps a little bit. Absolutely, I'd say that under 15 times unless it just has been so far off of its valuation highs.
Right.
And that's with Nike and Lululemon. They're trading towards 2014, 2018 lower bounds of PE and pricing.
And we also mentioned another thing would be declining debt. That was something we watched. Positive cash flow, another element on the balance sheet that seems attractive. Thank you so much, Tony. Good to see you. Appreciate it. With names that we all know and love to talk about. And Tony Zapparo, thank you, CEO at EquitySet. Still ahead, we'll bring in our panel to discuss Palo Alto Networks. Cybersecurity company's mild guidance led to a downside reaction to the latest earnings numbers. What's going on? Is there opportunity here? We'll be right back.
All right, Tesla's still going. This is a pretty interesting day on Tesla.
I remember when I first started flying, and we would experience turbulence, I would watch the flight attendants. They're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be.
Tesla, nice pump.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week at schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, powering every investor and trader.
Every market day.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk.
Tesla,
Passionate traders
hanging out at the highs.
trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network. Welcome back to the watch list.
Tesla, low profit taking. It's 250 on the East Coast, the best coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com, Tuesday the 21st. About an hour and 10 minutes to go. Hour and 10 to go. Looking really strong. Tesla having a good day. Seeing a little profit taking coming in.
Palo Alto Networks, they've been going through what they're describing as a platformization shift within their go-to-market strategy, which means essentially two things here. Firstly, Palo Alto Networks is bundling more of its products when it's selling to its customers. And it's doing this because CEO Nikesh Arora believes that he can drive the company to longer-term, very durable revenue growth in exchange for some short-term pain in terms of a shift in go-to-market strategy that will, over time, unlock customers' ability to purchase more and desire to purchase more Palo Alto Networks. So while this transition is ongoing, we're expecting the potential for some volatility in overall Palo Alto Networks results. And I think we're seeing a bit of that with what was reported last night. We saw a solid, generally in-line print coming out of Q3. Q4 generally guided around in line with expectations, but not massive upside. Nevertheless, strong descriptions of good pipeline from Palo. So overall, I think we're seeing just stable execution. Nothing that gets us too excited about the future just yet. But if the company can drive forward its platformization push to expand revenue and really drive that durable growth that it's been describing, that would get us more excited.
Tesla continues, should see some follow through, I would think. Nice work.
Today, over at Macquarie, we raised our fair value estimates to 366 from 300 on that. Tell me more.
Tesla, Apple.
Please tell me more about some of your thoughts there.
Very nice day for all of you that are still watching Tesla, Apple, and a few other stocks. Looking for Apple to pop at some point. Looking pretty strong. Nvidia pulling back.
We think it makes a lot of sense. We're already seeing some privately held players come up against real headwinds as they try to land new customers. So all in all, we think this platformization strategy is sound, and strong execution on that strategy actually increase our confidence in Palo Alto's long-term growth profile, which is part of the reason we increased our fair value estimate by roughly 20%.
There are people who think that products are absolutely excellent, and that will be part of the catalyst. You noted some of the cost controls, for example, cutting the spending on multi-point solution vendors. Is that a good thing that they're doing that? Because sometimes I worry when they cut certain costs, does it hinder growth? But they are in the world of cybersecurity among the best. Are they among the best on that?
Yeah, they have product leadership in around 22, 23 different categories, up from essentially 3 or 4, 5, 6 years ago. So yeah, they've definitely built out breadth in their platforms. So they have 3 different platforms targeting network, cloud, and then security operations. Yeah, we think that Palo Alto is as close to a platform vendor as you can get within security, but at the same time, again, security is an incredibly fragmented market. Palo Alto's, TTM sales are roughly 4 to 5% of their TAM, which is supposed to show that the security market is incredibly fragmented, where the largest pure play security vendor controls roughly 4 to 5%.
Okay, Apple's trying to go.
In the race of AI, Palo Alto highlighted a new security offering back in early May. You noted that, Fred. Are they still a front runner? Are they still in the best category in your mind?
They're up there. I think that in terms of what we're seeing in AI and cybersecurity, I still really like what CrowdStrike is putting out there, and I think that they're among the best positioned in the cybersecurity landscape to defend against that CrowdStrike is positioned to defend against the new threats that are coming.
Yeah, I saw that.
Generative AI and AI applications. But broadly speaking, Palo is doing the right things as well. They're talking about and they understand how increasing complexity and also more sophisticated AI.
There goes Apple. Apple going. Apple.
After enterprises, businesses, consumers, etc. So when it comes to Palo's overall,
Apple pop in here.
they're doing the right things and they're positioned the right way to try to help their customers understand the threats and defend against what's emerging now.
Yeah, you mentioned CrowdStrike. Where does MongoDB fit in, Fred?
I think that MongoDB is up there as one of our top it has our top database pick, especially for generative AI applications. It's doing different things, not going into the cybersecurity landscape so much, but in software generally, we love MongoDB. It is our top database pick, and we do think that it's well positioned to ride the AI trend, especially as
Apple going.
Out their own AI applications.
Yeah, thank you for that, Fred. Matt, what names are you looking at as some of the top picks, top players in these groups?
Yeah, so right now we like Palo Alto. Right now it's trading roughly in the 3 to 4 star range for us. But again, with the quality associated with Palo Alto, we have a white note rating on it, exemplary capital allocation. We think this would be definitely interesting for investors seeking cybersecurity exposure. Another name, which is also a white note name for us, is Fortinet.
the commentary on
Apple looking good.
how they're headed toward secular decline. Is this probably not merited either?
Thank you both, and those extra names as well. I'm Ed Kahn and Fred Hafmeyer. Good to see you both. Thanks. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Pedalides. I'll see you tomorrow. In the meantime, download the free Schwab Network app, Apple App Store, and Market on Close with Oliver Rennick.
Schwab Bank Investor Checking, the checking account built for
NanoX on the move.
highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on your device, for free. Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce.
Apple's still going.
I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. The client won't care how much you know until they know how much you care.
Ethan, how's our favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends?
Apple. Nice job, Apple. Continuation.
Technology does the work. So if I spot an opportunity in robotics or pets, well, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
I'm Oliver Rennick, and get ready to cut the cord. Market on Close is coming up. Good afternoon. Welcome to Market on Close. Thanks for tuning in. I'm Oliver Rennick. We've got an hour left in the session here. Stocks pretty much not a lot to report on the broad indexes. Not moving a whole lot. Little cap perhaps on top of the market's volatility ahead of NVIDIA tomorrow in the FOMC. It's definitely the busiest day of the week tomorrow, so perhaps an explanation for a bit of a sleepy session here. Russell slightly down, kind of the same situation as yesterday, where we started off a week and the Russell tried to rally back, and we're just not rallying as much today. So small caps are kind of stuck at that 2100 level. S&P is just above 53. All well generally in markets. Kind of mixed bag for big tech. We do have a tiny bit of just pause in the semiconductors just a day after a pretty good start right out of the gate this week. We'll be doing a little bit of prep for the next couple days, talking some macro.
But a few other things to keep us busy until NVIDIA comes out. We'll be discussing the international rebound in economies, perhaps supported by cuts, but also supported by other stimulus, like in the case of China. Again, Norbert joins us here at the top of the show. Looking forward to catching up with him. First, we'll take a look at some of the movers here. It's a bit of a high beta break today. That's kind of what's happening. A little bit of a breather after a couple things popped off pretty big at the beginning of the week. NVIDIA down just below 950, so close to the highs, so close. All we need is a little bit of a nudge tomorrow to get a breakout in NVIDIA to a record. And technically, still, we haven't had that. We did have an attempt and didn't happen. And then now we're in the midst of our second attempt to break out past the old highs. So the context technically for tomorrow is that chip makers and NVIDIA are hovering near the record. Generally, the logic would suggest if they break out, you're pretty much going to see everything on the high beta category move too. That means Bitcoin as well. Today, a little bit of a breather there too after crypto rip. But Ethereum is still moving, and the ETH chart is the one that's got a big green candle on it this week, which puts us right below the recent highs from earlier this year, and then still below the all-time highs. Keep in mind that Ether never got back to its record. So, watching a little rumor mill around the ETF possibility. We'll address that later on in the day and give you the latest on that. Now, the other thing that's happening is you get a little bit of example of what we've also seen recently, where when the high beta stuff takes a little break, investors go to those utilities, kind of perking back up again. As we see the Utes, one of the positive groups on the day. Today's contour of the market has a little bit more of that kind of defensive nature. But that's been a pretty good ping pong for us so far, where we go back and forth. Generally, stocks going up. It's just a matter of
Kind of a slow grind kind of day. Boeing dropping off from the high of the day. Looked like we're about to go green.
Takes a break like it is today. You've got the safety stuff with utilities, some of the staples, firm. So it sounds like the market basically has found a way to rally no matter what. That's kind of where we're at. We talked this week about the strength and gold, the breakout in stocks. There's a lot of things that look like they're building into an everything rally. However, tomorrow, still one slight hurdle we have to get through on the macro, which is going to be the FOMC minutes. We've had a ton of speakers from the Fed, so there shouldn't really be any big surprises. But at least the bonds and the dollar are keeping it somewhat interesting. If you look since the inflation print, CPI, pushed yields of the dollar lower, well, they both kind of come back a little bit. Dollar hanging out basically right where it was when CPI was released last Wednesday on the left side of the chart. A big leg down from the 10-year and the dollar, CPI. And the 10-year made a pretty good move back, but then in the last 12 hours, it was also kind of firmed up a bit. So we're watching both of these tomorrow. Probably going to be moving away from that pin around the CPI level would be my guess. And that should probably give us an indication as to what type of rally we'll be getting, or if we'll be getting one at all, if it's some kind of shocker tomorrow. But for the most part, the water seemed pretty calm and the stage well set for the big day this week, which is tomorrow. But we still got some stuff tonight, too. We got a little earnings mixed in this afternoon as well. Right now, I got Kevin Hanks and Jenny Horn with me here in studio. As we've got a couple Fed speakers today, Kev, obviously, but it just doesn't seem like there's a lot they can do to really move the needle.
All right, just grinding along.
I'll tell you what I think the market's doing, then I'm going to dispel the whole theory that I'm going to give.
Oh, that sounds fun. Okay.
The dollar.
All right, Dell's starting to turn the corner now. Shorts are starting to cover on Dell. Dell's starting to turn the corner from the lows. Apple, Tesla. Having a good day, Tesla.
Now, after you get to those two, which is a mixed look at the market, I think this market, the macroeconomic effect of NVIDIA's earnings tomorrow has got everyone paralyzed and waiting for tomorrow.
Yeah.
And you're just unwilling to put any more fresh powder to work before we see the whites of NVIDIA's eyes.
Totally. That's tomorrow afternoon. So I see it.
We got the whole day to wait.
Yeah, if we get pinned tomorrow as well. I mean, it looked like maybe that we weren't going to wait for earnings on, judging by the session Monday, but I think today kind of brought us dipping down there a little bit. We need some more numbers before we get fresh breakouts. To your point on the Canada inflation, I do think that's important. We talked this morning with Jeff Kleintown about the trajectory for cuts. It seems like one thing we're hearing from all the Fed speakers is that we will not be the first to cut. And so that keeps the dollar somewhat elevated.
Right, I think Europe is very close, like June. I think the earliest we're going is late summer, and that's if we see data crack. If not, it's later. And so, yeah, you're right. I think there's upward pressure on the U.S. dollar because of that. Because of other central banks around the world are going to go before us, if not, Oliver, way before us. So, yeah, I think there's upward pressure on the dollar.
Right, we're going to talk some more about this at the end in a moment. Jenny, what's up with Tesla? Do we have an answer? We're looking at this. It's up 6% today. It's like whole market's asleep except for Tesla.
I know, so it increased its loan rate, right? It's 72-month loan rate in the U.S.
All right, Google, what are you doing, Google? Just grinding along. Google taking forever to get something going on this one. Grinding higher. Volume shows institutions that just keep buying shares.
The one thing that might be a reach, but I mean, has seen considerable strength all day is XPeng actually reported some narrowing losses in its quarter, and it's been argued that XPeng is one of the most closest to Tesla's business model.
Google.
Because of its like autonomous reach, and also it has a Model Y competitor. So I mean, maybe you can make that reach, but I mean, like Leon O'Neill also lowers. So XPeng's an area of strength with Tesla, and that's the closest I can correlate.
I'll give you my quick theory. And it comes from the cynicism of a 40-year trader. The fact that there's no bad news or hit cases out on Elon Musk means Tesla, some of the pressure's off, and the stock will drift higher. Unless there's hit pieces or negative articles on Tesla, which seems almost big.
So your case would be that it's kind of bottomed out since we got a couple gappy days last month to the upside.
Exactly.
It seems like they have been able to hold the Tesla bulls, the line basically at 170. So if that line holds, then that's kind of where we gapped up to on the robo-taxi story and stuff. Where I think that did kind of set a little bit of a floor in this. A lot of people thought that meme was going to fade when we talked about the robo-taxi, but now as we get closer, time moves quick here. We're almost through May, and then we get to that event this summer. I mean, that has kind of been the pin in this stock at 170. So we hold it, maybe try 180.
I was going to say, I mean, there's quite literally a floor that's been built basically after that gap up. I mean, we're basically still trending above the 50-day moving average, which is an area we haven't been able to hold above since, I mean, like at this point, it's been months. So I do agree. We've created somewhat of a floor, so maybe just now finding our footing at this new level. I mean, that's not a bad thing because as we know, Tesla considerably can rip up and obviously sort of crater on not real necessarily news. So just like we've seen things fall, and every day I've been arguing that like maybe this isn't actually bad news for Tesla. We're now seeing the same with like upward catalyst, which is I think actually refreshing.
Yeah.
All right, it looks like the S&P wants to go again, maybe a higher high. We got some supply just overhead at 531. Looks like we're trying to break to the upside with 50 minutes left to go. VIX is dropping off. 50 minutes to go.
Google search, and actually, I was talking about this earlier with Kevin Green, the power grid restructuring that has to happen for like the build out of Arizona and all these various plans for AI is astounding. I mean, like the amount of power that this is expected to use these data centers, it's going to rethink the U.S. power grid. I mean, I say that even the global power grid, more specifically here. So First Solar is a huge part of that, and this is like the ancillary conversation of AI. You talked about like the REITs and these various trusts that own the land, but also those that are supplying the power. I think I could easily make that.
All right, the S&P pushing a bit higher.
Bitcoin mining and the robot takeover. We need a lot of power, but apparently this is like the only solar stock that's capable of doing it, though. I mean, everything else still in the dumps in the sector. So for solar pulling away. All right, thanks for the heads up. First Solar up big, Tesla up big, and most of the market pretty calm. It's gonna hang.
Wow, First Solar, a big move on First Solar. First Solar still going. Big move on First Solar today. This is the weekly time frame. The daily looks pretty good. 60-minute chart. Price action taken off to the upside on First Solar. Nice. First Solar looks good. Tesla, Apple. Okay, Apple still pushing.
There's some difference there, and I think that means that many central banks around the world are going to be looking at cutting before the Fed, and obviously that rate differential is an important variable in the dollar outlook. So it's pretty hard to sort of say, okay, the dollar is about to get a lot weaker when you look at that. Obviously, that's not the only parameter that's relevant to the dollar. It's important what's going on with global growth. It's important what's going on with asset allocation. But it is certainly an important variable, and it's hard to get very bearish the dollar if the Fed is amongst the most conservative central banks in the world.
Now, does the dollar, though, have limited heights if we're not hiking, or if our economy doesn't get the same boost, if others are going to cut quickly? What does that feedback timeline look like? And how much can we figure that out?
I think the tricky thing about the dollar is that we've essentially been on a strong run since 2014, right? So we're 10-year into a pretty strong trend for the dollar. And we're getting to
All right, nice pop on the S&P. S&P popping end of day.
That doesn't mean that the dollar cannot go a little bit further, right? But it's already come a very, very, very long way. And I speak to global investors all the time. There are certainly many big investors around the world that have concerns that, there's long-term issues in the U.S. economy. Fiscal deficit is very big. Can this economy really continue to hold up if we need to have fiscal tightening around the corner? So that's one of the reasons why people are reluctant to have big dollar positions here. So to be honest, I think we're kind of in a range environment here over the summer period until we get a clear catalyst. And I think the catalyst really is actually not so much an inflation anymore, but actually evidence that the economy is slowing, right? So people are hyper-focused on the labor market. Is there anything new going on there? I think that's going to be the next catalyst, the most important one.
Okay. All right, love that, Jens. Let's talk China here. It's been one of the comeback trades of the year.
First Solar.
Rebound trade, leading international markets in the second quarter. What is the most important thing to figure out to assess if it can continue?
Yeah. So China has kind of reluctantly engaged in a stimulus in the real estate sector, where there is talk about them essentially buying up empty properties, right? So to rebalance the real estate market, they're going to take off all those, people talk about ghost towns, but like lots of empty properties that have not been sold. The public sector is going to take those. There's going to be some form of social housing coming out of that. And we can see in some of the high-frequency data that activity in the real estate market is starting to pick up a bit, probably because sentiment is helped by that prospect of government intervention. So that, I think, is good news, right? But the problem was the challenge that they would
Tesla took some profits off on Tesla.
Overpriced real estate is a very big one, right? So there's no silver bullet. There's no super easy solution to this. So I think what they've done here is that they've removed some downside risk by coming in and supporting the market, right? But consumer confidence is really very depressed in China. Like one extreme indicator of that is that fertility in China has gone down as well. Like people have been so impacted by this weak economy that they don't want to expand their families anymore, right? So that shows what a big challenge they're facing. And we should expect like a drawn-out process of trying to revive sentiment, not something that's going to change from one week to the other.
Okay. It looks like there is some seasonality potential to housing. You've got a good chart that looks at property sales in China, 30 cities, and how off the average of the last 7 years we are here in the red line. Pretty rough, but at least it does seem like seasonally there's a pretty good summer pickup that should maybe help us get back on track, or help them rather.
Yeah, I think there's some of the other high frequency indicators that we track in China, such as like, interest in getting new mortgages starting to pick up a little bit. So that very
S&P a bit higher, looking good.
Perhaps there's some hope that we are sort of beyond the very, very worst, right? But it's a challenging situation they have. They've been overbuilding for at least 10 years, right? So that overhang is not going to be solved from one day to the other. If we go back in the U.S., right, and think about how long after the financial crisis did it take for the housing market here in the United States to reach more equilibrium, it certainly took 5, 6, 7 years, right? And we're a couple of years in China, right? So it'd be surprising if they can fix the problem in a couple of weeks, couple of months. This is something that is a multi-year process. And I think it's fair to say that consumption in China is unlikely to have any boom. And this is actually also important to what's going on with the inflation outlook globally, right? Because one of the things that's going on a global scale that is impacted by China is that China is exporting a lot of goods right now to the rest of the world, partly because they have such a weak domestic demand. And that sort of extra supply of goods is part of the reason why inflation on the goods front is actually improving in a lot of places. We actually have more or less zero inflation in the goods part of the basket. It's only the services that is keeping it very high, with the U.S. as an especially important example of that.
That's very interesting because it kind of challenges what might be this common theory of China getting back on its feet as a source of demand to lift some of the demand for commodity prices, but we're also pushing out tons of goods at a higher productivity rate, and that helps. Do you believe that China is a major force for movements in the copper market recently? Or, I mean, crude's basically been stuck under 80, so it doesn't seem like it's shown up there.
Yeah, no, in the commodity space, you have very, very interesting divergence, right? Where
All right. First Solar, Apple.
Gold price is in a major rally, and copper has been an even more extreme bullish situation, right? So I certainly think for gold, there's quite a bit of evidence that the sort of fresh demand is coming out of China. So I think China is important to that story. But the question really is whether you can tie those metal prices with sort of traditional economics, right? Because gold is typically accumulated kind of for non-economic reasons, right? And the question is what's going on with copper, right? So is it because they're exporting a lot of industrial goods to the rest of the world?
IBM flagging in the afternoon session. IBM looking for a follow through tomorrow. Apple, a little profit taking.
And the data on that is very opaque. So that's one of the big questions I think investors around the world are going to try to figure the answer to.
Tesla having a good day. Tesla. A little profit taking at 185.
Gold one is not too mysterious, right? Seems like the data is pretty clear that they are piling up on gold.
Yeah, I think on the gold front, we can see it on many different measures, right? So, like, just one way of looking at it is, Chinese imports of gold clearly have settled at a much higher level than we were used to in recent years, right? So that's something that's very concrete. And the good thing about the
AMC
is that we can cross-check it, right? So even if we don't always believe the Chinese data, we can check it, like who's exporting that to China, and that trend is very, very clear. We can also see it on the futures.
AMC starting to move.
The COMEX, the U.S. Gold market has big swings, but actually in terms of like the sort of really trend increase in open interest in Shanghai, and if anything, it's higher. Right?
Starting to see a little move here on AMC end of day. Nothing to write home about, but it looks like it could get something going. AMC. What's GME doing? GameStop. GameStop buyers at the low of the day. Okay, nice little follow through there. GameStop.
What's the preferred way? Like, is there an obvious best risk for your reward to play China right now?
Well, I think on the gold front, what I think is perhaps interesting is if you want to have a long gold exposure, it doesn't have to be versus the dollar, right? If you're a bit on the fence as to whether the dollar is going to start to weaken, like maybe you want to be long gold versus some other currencies. Maybe it's gold yen, maybe it's gold euro. Those are ways where you can get the long gold exposure without having the dollar exposure embedded in it. I think that's
okay. Apple pulling back. AMC, GameStop turning the corner.
Sort of better risk reward trade than the straight up traditional gold versus the dollar.
All right, like it. Some creativity, international trade from the international land. Thank you, Jens.
Thank you.
Good stuff. Appreciate it as always. As Norman McPattern, CEO at Exanta Data, co-founding Thanks to Joe at Market Reader. Had some good stuff there on how to trade China and the connection into commodities. When we come back, we're going to get ready for a big event this coming weekend. F1 at Monaco. Well, at least the best we can get ready for it as traders. We're looking at Ferrari. We'll be right back with the trade of the afternoon.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what all this for?
This lets me adjust the base, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
No problem is the only front man you need.
Oh, I gotta take this, Carl. Schwab. Have a choice in how you invest with Schwab.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available
All right.
anywhere on any device for free.
All right, just watching AMC. I'm bored. We got about 7 minutes to go, 37 minutes to go. I'm your host, Cousin Vinny, coming to you from the closingprint.com. It is Tuesday, the 21st. Looking for something to happen. The S&P popped up to the highs of the day, but just stopped right where it was. Most stocks that have been moving today, Apple, Microsoft, Tesla, First Solar. Looks like people taking profits off the table. Watching AMC here out of boredom.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Back market on close. Let's do some trading, and we're going to do it fast. Tony Zhang, chief strategist at Options Player, looking at Ferrari. Now, Tony, you got the usual amount of time, but hey, what's with the fate of Ferrari? Because they're like pretty close to winning this thing. If they can do great in Monaco.
That's absolutely right, and it's hard to do this to my favorite F1 team, but it really comes down to valuations, and I think that in this current market environment, with the valuations that's currently traded at, it's due for a potential pullback here. You know, we took a bearish trade out here in late November. Had about a 10% decline. Now the stock's up about 12% from when we first looked at this back in November. I think there's a new opportunity right now, especially after it's had a very nice run this year, up about 25%, which is more than double what the S&P has returned this year. You know, this really has all the classic signs of what you would typically call a bullish to bearish trend reversal. First of all, you have a bit of a head and shoulders top that started to form here after a rally from that 330 all the way up into that nearly 450 level here to the upside. You've got that head and shoulders pattern with the 410 neckline. It hasn't broke that neckline yet, but if it does, we're headed back to 370, 380 to the downside. So the downside decline is fairly significant. If you fill that gap, that's about 355. That's about a 13-14% decline from where we are right now. And if you just look at the relative performance of Ferrari relative to the market, it's starting to underperform after what has been a strong outperformer this year. And then if just simply momentum has turned negative here, I think there are some signs that this is starting to roll over. There's a risk, in my opinion, that this could tumble fairly quickly by quite a bit.
All right.
It really comes down to the story of valuations because Ferrari, it's a great brand.
Google trying to push a bit higher. Google end of day trying to go as well. Google pushing a bit higher end of day, looking better.
It's expected to grow at a pretty healthy clip, about 15% EPS growth over the next
Nvidia bouncing.
The stock trades at 48 times forward earnings. That's the valuation. That's 140 times higher.
GameStop.
S&P 500 stock. While growth rates are expected to be 6-7% higher than the average S&P 500 stock, but we're talking 140 40% higher valuation than the average S&P 500 stock. So it really comes down to that. It's got decent margins, it's pretty resilient to downturns, but those valuations, I think, in this market environment just requires a second look. And I think given what we're starting to see here in the charts, that underperformance and these valuations, I'm concerned that this is a stock that perhaps got a little ahead of itself on the back of the popularity from F1, that the risk here is to the downside, unfortunately.
Yeah, well, I mean, cybersecurity companies are getting punished with lesser valuations, so I mean, it seems a little odd that they're in that category of stock in terms of price. All right, case made. Fundamentally, the technical too kind of does look like it's softened up a bit. How far? Where do you go? What's the structure of the trade that makes sense, Tom?
Yeah, definitely want to buy myself a little bit of time on this particular trade, but the VIX trading around that 12 handle, I definitely want to be long volatility. So going out to the July expiration, I'm looking at buying the 420 puts and then selling the 390 puts against that, simply because this is a high price stock. Using a put spread will allow you to reduce the capital outlay to take some bearish exposure. It reduces your overall risk, it reduces your the amount of capital that's required to get into this trade. You can put on that $30 wide debit spread for just around $10 earlier today. That's the way that I play it. You have about a 2-to-1 risk reward ratio if it does get down to that 390 level. Like I said, from a valuation perspective, I think this could get down into the 350s or so. So right now in the short run, I'm only targeting that 390 move here to the downside, just to see if my thesis that there could be some underperformance plays out. If that happens, that is
all right, Google continuation.
buy some more downside, perhaps moving the strikes lower down to that 390 and start targeting that 360 downside once it reaches that 390 level, if it gets there. But this is a good way to start getting some bearish exposure while risking
Apple's still trying.
Under 2% of the stock's
A little bounce on Apple. So somebody was taking some profits off on Apple. We got 30 minutes to go. 30 minutes to go. Tuesday, 21st of May. 30 minutes to go.
Weekend, Tony, take the trade off?
Unfortunately not. I'll be cheering for Ferrari from an F1 perspective, but the stock price, I think, has decoupled a little bit from reality.
All right. Well, you're winning the way then, okay? Well, hopefully. You've got multiple outs then, as a fan and as the trader. Thank you, Tony. Appreciate the trade. Chief strategist, options play. And I'm fading the Ferrari ahead of the races this weekend coming up. Bunch of bullish options trading today. Tom for us. We're going to take a look at that first solar move again as it continues to detach itself from the rest of the solar trade out in the world. It's flowing for solar now back above $200 with an additional 7% today.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a month. Other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put people before. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Have you ever wondered how AI could enhance medicine? Here's a way. French drug maker Sanofi, OpenAI, and Formation Bio are collaborating to accelerate the development of different medicines. And they want to set the standard for drug development.
Okay, Google's still pushing a bit higher.
Sanofi access to proprietary data to develop develop its AI models for biopharma projects, Formation Bio will give additional engineering resources. And together, the three companies
S&P
will
breaking out.
data, software, and team models to create custom solutions for the drug development lifecycle. And so far, the company says potential benefits for patients awaiting new drug treatments are huge. For all things AI, medicine, and other related stocks, download the Schwab Network app and tune in live at schwabnetwork.com.
Welcome back to Market on Close. Let's look at some trades in today's session and revisit that first solar breakout past $200. Tom White, why is this the only way to trade solar right now?
Well, it seems to be, and UBS analysts had a big note out on it. They raised the price target to 270 from 250 to keep the buy rating on. And they are basically stating that they don't need a lot of outside supplies. First Solar does a lot of in-house building. They can become first to market. Now, AI uses about 10 times the amount of electricity than traditional Google search. So you see the utility.
Oh, wow. There goes the S&P. Google taking off to the upside. Google looking good.
It's not as defensive as it once was.
I don't think it's just defensive. You've seen rates come off over the last couple of weeks, and that's helped the utility sector. But then also there's this expectation that we're going to use a lot of energy moving forward.
Yeah. And things that they always rally seem the day when the tech stuff's down. You know what I mean? Like, but okay, I guess they still have that maybe like function a little bit, on the anti-beta days. But I would think it would be more connected to the AI power demand of like the day when the AI stuff around.
Yeah, I mean, you would think that, but I think the solar aspect of the utilities and the demand that's going to be needed out there is the reason that you're seeing these notes out of UPS. Piper Sandler raised their price target on them too. The EPS growth that UPS put on First Solar is pretty astronomical. Expected EPS is expected to go 374% to $36.74 in EPS in 2027. That's currently at about $7.74. So
Okay, we got 26 minutes to go.
To ramp up to 64% in 2028 from 39% last year. So these are big numbers on a growth aspect, and it's all based on the fact that we're going to need a lot more energy due to AI getting into every segment of every industry at some point. Call buyers galore in there. Call volume is about 3 times normal daily average volume. In their stocks up, 22% so far this year on this jump today. But one that stuck out to me was out in the September cycle. There was a couple options that traded some unusual option activity in there. The one that caught my eye first was a trader bought nearly 3,000 of the SEP 240 strike calls.
Okay, T. Rowe Price, T. Rowe Price pushing a bit higher. Take a look at that. T. Rowe Price, nice follow through.
So they gave themselves 122 days. Break even's about 18% above the current share price that they're now. Bullish. And they also bought about 3,000 in the September 220 strike calls in there earlier. So somebody's loading up in September. You're going to capture another earnings event also in there. But two positive notes
T. Rowe on the move.
On this, and you wonder if this was the overlooked segment.
S&P popping. Nice little pop on the S&P.
Out there in some of these other names that have done better than them, based in the utility segment of the market at this point. But, pretty solid note if any of these expectations come through for Solar. They added some stuff in their note about, as I mentioned, the ease with which First Solar can really ramp up production of panels. They also did say the utility scale solar represents 80% of the corporate power. 40% of that is from the 4 big tech companies that are going to need it.
Yeah.
The build up, the Meta, the Google Alphabet, Microsoft. Yeah.
All right. Look, I mean, I guess it's a pretty compelling case for them to kind of lead an industry revival. I'm not sure how industry it is. It sounds like it's First Solar's ability to deploy. And all right, but either way, big bullish price target from this analyst, and we've got some traders falling on. It seems. I mean, the strike that they're picking here is so out of the money. I feel like connected.
Chase credit card data. March and April was about similar from a spending perspective as the fourth quarter and holiday, which outperformed expectations pretty much across the board. So Macy's this morning, I think it shows you the resilient consumer, but also the selective consumer. You have a consumer at the high end that's being more choiceful. The low end, I do think, is a melting ice cube. I've been on the show before and we've talked through this. What I'm calling it now is a selective recession. And again, that's 40 trillion of net worth that's been created since 2019 at the high end, but it's a low-income consumer that by our survey work, 70% of low-income consumers right now are saying they're struggling to make ends meet and really cover with savings their cost of living.
You still like Ross TJX in Burlington?
I think that's your sweet spot. So what that tells you on that selective recession or that choiceful consumer, in my opinion, the consumer wants value, but they also are striving to own the brand. So if you sell brands for value, that's off price. That's TJX, Ross stores in Burlington. In my opinion, that's your sweet spot that is value and convenient and as good, if not better, than where you were pre-pandemic.
TJ Maxx.
Expanded the demographic reach as to who's shopping your box.
But you think overall some of the concerns about the consumer fading are overblown?
No, I think it depends where you're looking. So if you're focused on that low to middle income consumer, they're under pressure.
GameStop, a little run up, and they just sold it. $2. Wow. It's $2 move on GameStop.
Worsening. It's just an incremental toll on that savings that they built. That's why I said I think the low end right now is that melting ice cube. But low income consumer, very different than low income retail. That consumer gravitates to the lower income retail. But what happens is you get the trade down effect. And that's where I think you're seeing with the discounters with Walmart. I think that's where you're seeing the off-pricers. I think the dollar stores. And so low-income retail can benefit when low-income consumer is under pressure. It's the middle that ends up getting squeezed. And I think that's where if you're not the best at what you do and you do not have differentiated innovation, you're falling somewhere in the middle. And I think that's where you're going to come up short. And those are the companies that
GameStop, that was a quick move right there.
Let's talk about some more names. You think we're set up for a good beat and raise from Birkenstock? Tell us.
I do. So I think Birkenstock fits into best-in-class brands. So where I was saying before, if you have differentiated innovation, technology, and scarcity of brand, that's really what Birkenstock has. Capacity unlock that's just happening now so that this brand can service Asia. So there's a material shelf space unlock on Birkenstock. We think for the next 2 years, I think that brand is white hot, and it's a brand right now where demand exceeds supply by 30%. So we like Birkenstock into the print and for the multi-year story. And I like PVH, Calvin Klein, Tommy Hilfiger. They did not raise price during this entire period where a lot of other brands did. So those brands stand for value, and there's a tremendous amount of self-help still on the margin side with the supply chain.
Are you too optimistic about Lulu? You have overweight and you have a $500 price target on it. I mean, that stock has not done well at all. You use the word differentiated when you talk about why you like Birkenstock so much. And there might be some who would suggest that that's the problem with Lulu at this point, that it's not that differentiated anymore. And with brands, Glory.
All right, well, coming into the last 20 minutes of the trading day.
The same, but cost half as much. That this is a real problem. How do you see it?
Yeah, I'm glad you brought it up, Scott. Look, I think what Lulu finds themselves in right now, it's a moderating growth story, or perceived as a moderating growth story. The truth is, on a multi-year basis, I think that Lulu can drive the double-digit top-line growth, which would equate to...
Wow, Lulu at 320, pulling back.
You have international that's still in early innings, less than 20% exposure to the international markets. You have men's that can still double from here. Accessories is still an opportunity. And the TAM...
Walmart making new highs. Walmart.
I mean, there's just no question that it's larger on the other
Walmart's
side.
pushing a bit higher. Costco.
Which is a very strong brand, more on the men's side.
Grinding. Costco still at the highs, $800 per share.
But I don't think anybody mapped this space out as potential use case 7 days a week. Not just the weekend and the active and casual. but the work environment as well. So I think with a larger total addressable market, it's on Lulu to continue to show the innovation and that differentiation. And right now, you're kind of caught between the catalyst of holiday, where I do think that Lulu potentially over-earned with that younger customer that came out strong. And now you have the out of stocks on the size 0, 2, and 4 within the box. And I think from an execution perspective, they probably could have done better in this first quarter, but it's a lull. We'll see as the in stocks come back, and I think the color comes back. And I don't think that competitively that this is a moat that Lulu can't come out on the other side just as strong as they were.
But you're comfortable with the multiple and the premium multiple that you're paying for what you even describe yourself as quote unquote moderating growth.
Look, I think it deserves a premium. What I'm saying is you're caught right now in a moderating growth runway, whereas 20% plus operating margin with a double-digit top-line profile, there's no question that if that is the other side of this, maybe 1 to 2 quarter moderation in growth, then I think you see Lulu back on the other side of that premium.
Interesting. I appreciate the conversation, Matt. Thanks so much.
Great to be back.
Yep. Good to have you, JPM. All right, up next, we're tracking the biggest movers into the close. Christina's back with that. What do we see?
Well, we are seeing 2 wins for a major pharmaceutical stock pushing into all-time highs and a surprise buyback for a semiconductor company. Details next.
All right, Celsius. S&P at the highs. Celsius watching for a pop at some point. Celsius trying to break out of this cup and handle. Looks like it's building a handle now. Celsius could stay here for a while. NVIDIA, nice pop. Google. All right. So we got a few minutes left to go, about 16 minutes till the closing bell. 16 minutes. Okay, looking for a higher low. We got a few minutes left to go. 4 minutes, 14 minutes to go. All right, S&P trying its best to make another higher high. Traders closing positions. Looks like we are drifting a bit lower. Google drifting a bit lower. at the moment. Looking for a follow-through day tomorrow.
We are less than 15 from the bell. Let's get back to Christina for the stock that she is watching. Tell us.
Let's start with semi-cap equipment maker Lam announcing a surprise 10-for-1 stock split, its first split in 24 years, and also a $10 billion share buyback. This is part of Lam's commitment to return annual free cash flow back to investors, a promise they made. The stock split wouldn't do anything for market cap in terms of math involved, but it would invite more investors to participate. Shares up 2%. A big day for pharma giant Eli Lilly. Positive test results for a phase 3 Crohn's disease trial. Separately, Eli Lilly's diabetes drug also received approval from Chinese regulators. Both of those, reason why we're seeing Eli Lilly up almost 3%, trading at all-time highs. Scott?
All right, Christina, thank you. Still ahead. Ether is surging in today's session. We'll tell you what's behind that big bounce, what it might mean for the rest of the crypto space as well.
AMD. Bitcoin about 45% into yesterday's candle now. Pulling back. All right, the S&P is pulling back a bit. All right, looks like people are closing their positions. We're trading around the 5,300 level, pinning for the most part. S&P 500 staying near 5,300. We're 53.19, 53.18. A slight upward drift in the evening session. Volume coming in. We're seeing some selling, profit taking near the close. Other than that, the market's had a pretty good day today.
Spot Ether ETF. This flurry of activity is familiar because we saw something like this ahead of the Bitcoin ETF approvals. And we saw also that at one point, the SEC approved about 10 of those announcements or applications simultaneously, right? And so we do actually have some data on what analysts feel like this could mean. I looked at some information that Bernstein talked about. They said that, of course, given this political backroom drama, the approval of the NX application would be seen as a significant regulatory relief for the sector. But if these are approved, Standard Chartered estimated that the spot Ether ETFs can produce inflows of somewhere between 15 billion and 45 billion just in the first 12 months after approval alone. I don't know where they base this off of, but this is the first piece of data I'm seeing that has come out of pure speculation.
Well, welcome to the crypto world. No shortage of imagination. But like I say, the logic that they might be applying here could be sound. I mean, there were enough barbarians at the gate basically to break the walls down for Bitcoin. Term of speech, of course. So, we'll see if they can do it with Ethereum. They're just filing up and pressuring enough. Big reaction in the tokens. So, all right, thanks for the update. Appreciate that. All right, coming back. Going to get a big picture discussion with the Schwab team as we head into the bell and prepare for tomorrow. We're looking at stocks, but they're in okay shape here right now. Liz Ann Saunders joins us when we come back alongside Cooper Howard as we get into some of the data here for stocks and bonds. Don't forget, there are some economic points later this week too, so we'll have a good chat here and put things into perspective next.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends.
All right, we got 8 minutes to go. Looks like we're going to try to make a higher low right now. S&P is trying to make a higher low, higher high.
I'm Nicole Petaluzzi, live from the New York Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. They're not nervous, and I'm not going to be nervous. Financially, I'm a flight attendant in that situation. The relief that comes over people once they know.
Okay, Google with another bounce. Google looking pretty good.
I definitely feel privileged to be in that position.
At the highs of the day, but just below yesterday's high. Google looking good. Google making another high.
Welcome back to the Schwab Network. Got a little time until the bell here. Let's talk about the big picture with Cooper Howard and Liz Ann Saunders joining me this afternoon. The Cooper's Director of Fixed Income Strategist. Liz Ann is the Chief Investment Strategist at the Schwab Center for.
All right, Tesla looking good. Breakout on Netflix. Netflix, nice breakout.
Week they'll go off to a good start, Liz Ann, and tomorrow we got a big day. What do you think?
Netflix still going. Congratulations, Jennifer.
The big stock. Oliver, we don't cover individual stocks, but I think that's the reason why it's quiet today. It probably will be before they report. A lot, obviously, riding on that. If you look at the tech sector broadly, the blended growth rate expectation for the first quarter, which includes companies that have
Netflix going.
is about 23 or 24%. The UX NVIDIA out, and that drops down to 11%. So clearly, the expectation bar is certainly set high, and the whisper numbers have been coming in fairly hot. So we'll have to see.
Is there a lot of precedent for moments like this where it's so blocky the kind of construction of earnings for the index was dependent on one company?
It is rare.
All right, looking like we're going to push another higher high. S&P trying to go again. S&P trying to take the high. 5,400 is the call wall, so anything's possible.
Tomorrow we get you up on C. Cooper. I mean, I think for most stock-focused people, that's going to be pretty far second on the list. But I can't help but notice, yields have been kind of sticking around where they were back when CPI came out. So, we are kind of having a little bit of a two-week trade in bonds.
Yeah, so the stock folks get the big stock tomorrow. The bond folks get the big minutes tomorrow. But I don't actually.
There we go, making a new high. S&P is trying to go for the volume coming in.
Hear a reiteration of what we've already heard from many Fed members and Chair Powell himself, that they are preaching patience, so they are going to be hesitant to cut interest rates before being too early on that. So they don't want to see inflation reignite. So I don't think, yes, we do get the minutes, but I'm not expecting much of a shock from what will come out of it.
How much of that is just because we've heard speakers all week basically already? Like the volume of speech is already, we've got a big sample size in the recent, couple of days.
Yeah, and I think that they have really done a pretty good job of kind of laying the breadcrumbs out about what they are looking for and what they're anticipating. So again, they have been preaching patience.
All right, nice follow through.
The sheer magnitude of the number of speakers that we've heard. So we heard from Chair Waller today, we heard from Waller today, and he projected that they are potentially going to cut interest rates if the data coincides with that. So they just want to see more good inflation news. And I don't think that that's too big of a surprise or anything really new to come out.
Okay. Yeah, it seems like the general script has been fairly well followed. I hear a lot of the words steady, higher for longer. Is it my imagination, Lizanne, or has the market gotten quite a bit more comfortable with the notion of higher for longer than it was maybe 5-6 months ago? It feels like as long as we're not hiking now, these last couple of weeks, we're like rejoicing.
Yeah, I think it was a bit of a reprieve down from 4.7 in yields in the case of the 10-year that helped the market. And at least for now anyway, the possibility that the Fed would have to pivot back to rate hikes coming off the table, given a more tame set of inflation readings recently, as well as the
weaker than expected jobs report. So I think the market can remain in a healthy situation if we're in this higher for longer. And we have to remember too that the math is a little tricky the next few months in terms of
All right, we got 3 minutes to go.
particularly for PCE back down to the Fed's target, because you start to take out the really easy comparisons from a year ago, which of course a year ago your year-over-year comps were to the year prior when you had, in the case of CPI, a 9 handle. So we do have to be mindful of a math problem here in the next several months as it relates to base effects.
Okay, so I hope that we're going to see massive progress. Might be kind of a long shot, because we're still looking for that word progress, where it seems that even though the market really liked the last couple pieces of data, it's very arguable that they weren't very progression in the right direction. Cooper, how much in the minutes do you think we might get more detail on how they define that? Because Powell seems to keep relying on that. We need to see further progress. I think there needs to, look, I would love to get some clarity on whether less inflation is progress, but it seems like the market's determined it is.
Yeah, I'd be surprised if they really lay out exactly what they're looking for in terms of the exact number that they want to get it to. But they are seeing more progress on it. I think that what you kind of heard from a lot of the Fed speakers recently is that the most recent inflation data, although it wasn't really good, it wasn't wrong. So that was progress.
All right, we got 2 minutes to go.
So I think that that's another thing to look forward to. And so long as we get a couple more months of that, then yes, we do expect that rate cuts are going to be coming down the pipeline. So our view here at Schwab is we penciled in between 1 and 2 rate cuts, likely to start later on in the year, Oliver. But that really assumes that we continue to see progress on inflation.
Okay, trying to make a new higher high on the S&P. VIX is dropping off.
Our bar, always shifts. It seems like our goalposts on how we define the progress, or how, at least what the market's happy with. I guess when there's a kind of worst case scenario laid out there that doesn't quite happen, then things improve. But Lizanne, the combo of the inflation to the data the last 3 weeks is really what was kind of more troubling, with some of the survey data really falling off. We don't get much, but we do get jobless claims tomorrow. We have new home sales, composite, and durables on Friday. Does any of that add up to anything important, Lizanne?
I think claims are definitely worth watching on a weekly basis. The initial print, but also the 4-week average, and in particular what's happening with continuing claims. We did see that tick back up again in claims, and starting to see whether that turns into a trend, I think is important to get a weekly sense of the labor market picture.
Okay, because we got a couple weak ones there, but the moving average is still, you would look at it and say this is a bad job situation, but it has worsened.
No, but directionally, you've got to remember that better or worse often matters more than good or bad. So it's the direction that matters at this stage.
All right, for sure. Thank you very much, guys. Good stuff. Cooper Howard, Lizanne Sars. Nice conversation here to close out the trading session. When we come back, we'll take a look at Urban Outfitter earnings. We're going to talk about some of the fun stories from the day, and then some charts to get ready for NVIDIA tomorrow. So stick around. We got a half hour left. Young lady who is.
All righty, folks. Have a great evening. I missed the closing bell there. I guess I have my audio off. All right, everyone. Have a great evening. It's been fun. We had a good day today. Go out and enjoy yourself and stay sane and happy. Thank you, Fernando. Take care. Good night, everyone. Have a good evening. Ciao.